This is Bloomberg Surveillance with Tom Keene and Paul Sweeney.
I'm sorry, it's a boom economy, and that's what we're adjusting to.
Neither party seems to want to take on deficits at all.
With Lisa Mateo on markets.
Stocks are coming off of another record high.
And Michael Barr with news.
Tensions between the U.S. and China have heated up even more.
The best in economics, finance, investment, and international relations. This is Bloomberg Surveillance on Bloomberg Radio.
Good morning, everyone. Tom Keene, Paul Sweeney, Michael Barr on deep assignment, recovering from the Lions' loss. It's a multi-day affair.
It is. It's
for
okay.
For Mr. Barr, we understand it. Lisa Mateo, here she's seen red one 3 times. My sympathies, Lisa. Got through it. It's not doing well, is it? It's not. It's like
straight to streaming.
Merry Christmas to the Rock and all that. It's Fed Day, and as I said to Nathan earlier, I don't think it's routine. Andrew Hollenhorst will be with us here in about 15 minutes. We have a real equity skew today, Paul. But, you know, I'm sorry. It's sort of a nudgy Fed Day. I guess they're going to cut. But then what? But then what is huge.
Well, I mean, you guys are going to be with us starting at 1:30 Wall Street time.
Yeah,
you and the surveillance team will be there at 1:30 bringing us coverage. We got the statement at 2 p.m. And then the press conference at 2:30. And Tom, you're right. I think a lot of folks are saying, okay, we get maybe a cut here. Then what?
Then
maybe maybe not much for a while. I don't know.
We'll have to see there. We're going to watch the data today. At least with that business flash will help out as well. What I see is dollar stronger. Lots of EM. One of the smartest moments of the week, folks, was Damian Sassower noting EM currencies down 6%-ish through the year. You get to 7-8%, and that gets your attention. Turkish lira through 35. It's idiosyncratic. I get that. Plus, you've got Syria. David Gura speaking to the Secretary of State tomorrow.
I know. I saw.
Syria's got to come up.
Yes, exactly.
Do you think he'll talk to Secretary Blinken about Turkish lira?
He might. He might. You never know. You can pull one out.
We'll see.
But again, the dollar strength again.
Be very Bloomberg, but dollar strength here as we see some of EM challenged this morning. We're out on YouTube. Subscribe to Bloomberg Podcast. It's building every day. YouTube in your home, in your office. And, of course, after your commute, we say particular good morning. We got the Apple CarPlay numbers. Wow.
Nice.
Good morning, Apple CarPlay. Thanks to that commitment to new technology. From the Interactive Broker Studio, with our Bloomberg Business Flash. Here's Lisa Mateo.
You got it. We've got futures this morning. Hold on. Let me get my screen together. They're advancing. Traders bracing for the Fed's widely anticipated rate decision. We've been talking about it. It's forecast for next year as well. So you have NASDAQ futures up about 0.2%, 51 points. Dow futures up 0.2%, 125 points. And S&P futures up 16 points. The 2-year yield, 4.25%. That's little change. And the yield on the 10-year, 4.40%. And that is little changed. To currencies, we have the Bloomberg Dollar Spot Index. That's little change. We have the Japanese yen down 0.1% at 153.71 against the dollar. The euro stronger at 104.95 against the dollar. The British pound weaker. We have Bitcoin down 1%. It's now just above 105,000 after hitting a high yesterday. Cocoa futures also hit another record in New York, climbing above 12,000 a ton. Yes, chocolate, due to concerns of reduced output. There's a top grower, Ivory Coast. And then, yes, we've been talking about it. Shares of Nissan jumped the most on record, closed up 23% in Japan. It explores that merger with Honda. Sources telling Bloomberg that deal could be expanded to include Mitsubishi Motors, and that Foxconn actually approached Nissan about taking a stake. A lot involved here. Honda closed down about 3% in Japan. And Renault, Nissan's largest shareholder, said to be open for its partner. Renault, thank you, for its partner to pursue those talks with Honda. That is your Bloomberg Business Flash, Tom and Paul.
Nothing got Ken Pruitt more angry than me saying Renault, and the other one was Porsche.
Yes.
I go, it's a Porsche. You go, Tom, it's Porsche.
Exactly. Lisa, you're not kidding. Coffee year to date, cocoa year to date up 189%. Coffee up 72%. All the fun stuff. What's going on out there? I mean, it's commodities. I don't like to blame commodities.
Reduced output.
We'll have to see. My theme for the end of the year is this great bull market. It's nice that it's played along. Futures up 18 today, rebounding off the crater that we saw yesterday. Being a bull now is easy. Not being a bull, or being a bull, I should say, Christmas Eve of 2018 was exceptionally lonely. It's one of the great calls of modern equity strategy. Ben Laidler at the time at HSBC nailed the beginning of this great bull market. Ben, does it continue?
Yes, I think it does. I mean, I think this is very fundamental. I think 2025 is going to be the year that earnings broaden out, earnings accelerate. And that is the fundamental sort of bull case here in the US. And I think crucially, that's a bit of an insurance policy to the biggest risk, which is that valuations and sentiment have got pretty full and pretty rich. I think we need to be realistic. It's going to be probably a more pedestrian, more average year. You've only once before had 3 back-to-back 20% years, and that was the tech bubble, so we don't really want to repeat that.
Yeah.
So I would say it's going to be another double-digit year, but much more of an average year than a blockbuster year like this one.
Ben Laidler, we had on yesterday William Priest, who defined modern free cash flow analysis. Is the heart of the Laidler matter that underlying free cash flow and free cash flow growth is exquisite?
I think earnings matter more than ever, again, especially with valuations, 10 to 15% above average and sentiment so high. I think the earnings narrative for next year is this very impressive broadening. Tech is going to slow a little bit, but still post 20% earnings numbers. These interest rate sensitives, industrials, real estate, helped along by the Fed, are going to see strong improvements. And let's not forget, commodities, which have been the big drag this year, they're going to have a better year next year. That weakness is going to drop out of the numbers. So you're going to see a lot more breadth, and earnings could basically double next year. We're running something like 9% right now. We could get closer to 20 by the end of next year.
Ben, thinking about kind of where's the leadership going to come from this market going forward? I think many of our listeners and viewers have really been weaned on technology being the leader in this marketplace. Can we rely upon tech to lead in 2025?
I think leadership's also going to broaden. It may also change. As I say, I think tech's fine, but I think this market's just going to keep, broadening out as the bull market matures, whether that's the US, and we've started to see that, financials, real estate, industrials, but also globally, which is, it's up this year, 4-5%, hasn't been great. But I think as the US has a more average year, I think that gives the rest of the world, which has got very small, very cheap, very overlooked, maybe a little bit of a look in as well.
Ben, did your outlook for markets, for opportunities, for upside, did it change the day after the U.S. election at all?
Listen, I think we're all in a little bit of wait and see mode, but maybe just bringing it back to sort of earnings, that sort of opportunity for earnings growth to double over the next sort of 12 months doesn't really include an awful lot of acceleration in U.S. growth, potential tax cuts. So I sort of think about that a little bit as the icing on the cake. Now, obviously, we price some of that on a little bit with this sort of continued U.S. economic and market exceptionalism. But I think, again, I think it's an upside risk more than anything else.
Tell me about momentum, Ben. You're away from the factors analysis, some of the themes, the almost fads of the moment. Ben Laidler on momentum.
So listen, we need to treat it with some respect. Momentum is the most powerful factor historically, in markets. We've seen this extension of this U.S. economic and market exceptionalism. We're in a period of very strong seasonality. So I think we need to respect it. But again, I wouldn't fear it, because I do think it's going to be fundamentally backed up by the earnings continuing to come through and deliver. If that wasn't the case, I'd be, pretty worried here, because valuations are high. We've repriced down to 3 Fed cuts. But I think, the fundamentals of this bull market are the earnings are going to keep delivering.
So for earnings to keep delivering, Ben, kind of how much do we need the Fed to work with us here? We're going to hear from the Fed at 2 o'clock today. How much does the Fed need to help this market? Or are we more focusing on just corporate America, corporate earnings?
Yeah, we need a little bit of a tailwind here from the Fed and other central banks globally. We've had something like 180 interest rate cuts globally this year versus only 30 hikes. So this is very global. It's not just about the Fed. I think the Fed will help us. They may be in wait and see mode a little bit here, but we still have a couple more cuts to come. But I think a lot of this is also about corporate self-help. profit margins are going to rise, I think, even as economies maybe stabilize a little bit. And that's companies doing what they do best, managing prices, cutting costs, coming up with the new products. I think that is, the idiosyncratic story for next year.
I look at one of the definitive signposts, folks, of getting this bull market. And there's all sorts of latter-day bulls going on now. Ben Laidler's work over the last number of years has just been absolutely exquisite on having the courage and intelligence to participate in the great bull market. Mr. Laidler is with Bradesco BBI in London. Futures lift today after the carnage. I came in, Paul. The first thing I did with Paul Sweeney today was look at the drawdown. Dow drawdown. UNA. I mean, seriously, this has to do with the murder of the CEO at UNH, United Healthcare. But the Dow really having it's down 3% or so.
Exactly.
I mean, it's a massive drawdown. And NASDAQ and SPX are like under 1% drawdown.
I know. So here we are.
It's not even a pullback.
No, it's not.
It's sort
not
of a
at all.
pause.
We haven't seen a real pullback since July.
Futures up 18. With our news in New York City, John Tucker.
All right, let's start with the latest development of the killing of United Healthcare CEO Brian Thompson. The suspect, Luigi Mangione, now facing multiple murder charges in New York. Manhattan DA Alvin Bragg laid out the counts.
They include 1 count of murder in the first degree as a killing in furtherance of terrorism, 2 counts of murder in the second degree, 1 charging that the killing was done as an act of terrorism, and the second pertaining to the fact that the killing was intentional.
Well, Bragg says Mangione could give up his fight against extradition. That could bring him back to New York to face these new charges by the end of this week. Lawmakers on Capitol Hill have released a stopgap spending measure, but it could be a preview of fights to come. Let's get more of this report from Bloomberg's Gina Cervetti.
The bill would extend current funding into mid-March. It includes more than $100 billion in emergency relief for hurricane victims, the Maui wildfires, and the bridge collapse in Baltimore. But the fight to get those measures attached could point to even more challenges for President-elect Trump's early priorities. Republicans will have just a 1-vote majority in the House through at least April, since Trump picked 3 GOP lawmakers to serve in his administration. That'll be right in the middle of a push to pass a new budget along party lines, not to mention bills on border security, taxes, and other budget issues. Gina Cervetti, Bloomberg Radio.
And President-elect Trump has picked football legend Herschel Walker to become ambassador to the Bahamas, making the announcement in a post on Truth Social. Walker most recently had an unsuccessful run for a Senate seat in Georgia. To hold the ambassador position, he'll need his nomination approved next year by the Republican-led Senate. Trump also announcing he's nominating art collector Nicole McGraw as the U.S. ambassador to Croatia. And Wal-Mart becoming the most recent retailer known to have some store employees wear body cams. The nation's biggest retailer has some employees taking part in this pilot program. Well, some retailers are prioritizing theft prevention with the deployment of the cameras. A person close to the project says Walmart is focusing on the test on employee safety at a handful of stores involved in the pilot. Who would want to take on a Walmart greeter?
No, thank you.
Unless you're Paul.
I'm going to be there.
All right. One day, when he retires, he's going to go right to work.
Have you been to Bentonville?
I have not.
I've never been to Bentonville.
I would love to go.
Does Costco have a Bentonville, Lisa? We got to do some research on it. They're on California, maybe. I don't know. I'm ignorant of this. Bentonville. We should do a road trip.
I've never been in a Walmart. There's none.
You've never been in a Walmart?
No.
I'm sorry to
Oh,
say.
my word. You learn something every day on Bloomberg Surveillance. We say good morning. It's Fed Day.
markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
Bloomberg Interactive Broker Studio. I'm Lisa Mateo. We've got futures advancing. This as investors await the Fed's final policy decision of the year. The central bank expected to lower rates by 25 basis points with a focus on Chair Jay Powell's thoughts for January. Now ahead of that, we have more economic data, a read on housing starts, building permits. That comes out at 8:30 Wall Street time. And meanwhile, we're also learning that mortgage applications fell last week for the first week since November 1st. Purchases up, refis fell. The average 30-year fixed rate rose a tick up to 6.75%. So right now we have Nasdaq futures up 0.3%, 66 points. Dow futures up 137. S&P futures up 18. We have the 2-year yield at 4.25%. That's little change. The yield on the 10-year 4.40%, and that is little change. The Bloomberg Dollar Spot Index, that is little changed as well. To earnings we go. General Mills reaffirming its organic net sales forecast for the full year. Now, shares are racing their gains. They're now down about 3%. After the close, we'll hear from homebuilder Lennar, also Micron Technology. Few companies making news. Unicredit increased its holding in Commerce Bank to about 28%. Its shares are higher this morning. And Boeing resumed full jet production in the Seattle area, and that was after that strike. For on-demand news 24 hours a day, subscribe to Bloomberg News Now. Wherever you get your podcasts, I'm Lisa Mateo. That's a Bloomberg Business Flash. Paul and Tom.
Lisa, thanks so much. It is Fed Day. A wonderful set of guests coming up here this afternoon, and we do that all through the day. Andrew Hollenhorst is important because he was one of the very few voices, lone voices. I think of Dr. Elarian, a few others that were saying, we're going up and we're going to keep going up, and up we went. And then Citigroup changed his tone and looks for lower rates right now. But I want to go back to the academics that was pounded into you at UCLA, wrapped around the heritage of someone like Alan Meltzer, who landed at Carnegie Mellon. And that is a respect that each and every central bank is ex post. I had the honor of interviewing Richard Timberlake of Georgia, who basically invented the modern study of ex post. How ex post? How after the fact? In reality, how are they wedded to waiting for the economy to change as we go into this Fed meeting?
I think that's always the issue, Tom. I mean, of course, you want to be reacting in real time. You go back and think about the cycle that we've been through. Why did it take so long for the Federal Reserve to start raising rates? Why then did they need to raise rates so rapidly? Well, they were waiting to become very convinced by the data that we really had an inflation problem. Once they were convinced of that, then we saw rates move up very rapidly. And now we're kind of in a similar situation, I think, where they are waiting to be very convinced that we have a softening of the labor market and a slowing in inflation. So I'm looking at the data today, and I am willing to conclude from the data that we are in that section of the cycle. We're in that part of the cycle where job growth is slowing, inflation is slowing, but Fed officials, data point dependent is how I would describe it.
I mean, a lot of folks will come in, both academics like Cam Harvey at Duke or practitioners in the marketplace, and say that the Fed uses the wrong data. They use that historical data, as Tom was alluding to. The real-time data says inflation's already done with, and maybe you can be a little bit more aggressive here. How does that fit into your thought?
Yeah, I mean, I think Fed officials are aware that there are some big lags in the official inflation statistics. Shelter is the most notable category that has that issue where we're looking at, it's like light from a distant star, right? We know that rent slowed. We know that house prices have slowed. Now we're starting to see that slowing in the official shelter inflation statistics. And if Fed officials start feeling worried about the labor market or growth, then you'll see them turning more towards the idea that they can be cutting rates. I think where they are now is saying, well, maybe we're just getting the labor market holding up. Maybe we're getting growth holding up. So then we can really take our time, right? Then we don't have this urgency to cut rates.
So what do you expect to hear from Fed Chair Jay Powell today? Is there anything particular you're looking for? Because Tom's going to have complete coverage with the surveillance team. Michael McKee's down there in D.C. Michael McKee's down in D.C. asking the tough questions. What are you going to be looking for in his comments?
I think the key question is, how does he guide about the path forward? And I think, unfortunately, we're not going to get a lot of clarity on that. What Fed officials have been saying is we should be careful, we should be cautious. It may be that we're nearing the time when they can slow the pace of rate cuts. I think we'll probably hear all of that. But what does that mean for a January FOMC meeting with only 5 basis points priced in? I think that's where you come back to the data point dependency. If the unemployment rate stays at 4.2, that's a different story.
But we got a bipolar economy. I mean, President-elect Trump was elected because there's a lot of people really unhappy about this economy. We got another economy that Lisa and I don't live it. Sweeney lives it. We've got a boom economy. I mean, aren't they just wedded? I'm talking Catherine Mann now. Aren't they just wedded to nominal GDP? And we flat out haven't seen nominal GDP crack yet, have we?
You haven't seen it crack yet. It goes back to your question about ex post central banking. By the time you see it crack, it's too late. You want to move ahead of it cracking. So you're looking for the signs. What's going on in the labor market? Are we seeing the unemployment rate rise? I would argue it is rising. You have to do a little bit of adjustment to the participation rate.
Well, can you get us above 5% right now, a wise one?
I think we can get above 5%. The unemployment rate today would be at 4.6%, if not for people dropping out of the labor force and the labor force participation rate coming down.
Are you modeling out a 5% Q1, Q2 of next year?
I think Q2 we could very
So that radically changes the dialogue.
Exactly, yeah. So we have a completely different discussion. But I think the point you made also, and I think it is resonating with some Fed officials, we've heard them talk about that, the median consumer. Where is the median relative to, say, the 90th?
Well, Meltzer and I had a food fight. We're in the lunchroom at Carnegie Mellon with Marvin Goodfriend. And Meltzer threw a roll at me. He was so angry because he and I are arguing about aggregating data or looking at the bipolar America, the John Edwards II Americas. Did they ever look at the bipolar America?
Yeah, I think they are. Part of the problem is a data problem. Honestly, we set this data collection process up in the period just around the Great Depression, and it does focus on aggregates. But if you think about the Fed's mandate, full employment, what does full employment really mean? I think the idea in the Federal Reserve Act is that should mean that the median individual in the U.S. has a good shot at getting a job. And what we're seeing is that hiring rate coming down. We're seeing the quit rate coming down, which is showing people feel less confident about getting a job. So I think they are aware of that from some of the data.
Paul, what's President Trump going to do with a 5% unemployment rate, the jobs report first week of May?
Yeah, that's not going to be a welcome data point. I mean, if you get something like that, like a 5% unemployment rate, that gives the Fed complete leeway to continue cutting rates, wouldn't you think?
Yeah, then it's a very easy path down. Part of the issue has been all the volatility we've had in the job market. We could have a reasonable argument right now about whether job growth, you're supposed to just look at the monthly numbers, or you're supposed to take the payrolls numbers and adjust them down by as much as 70,000 per month, which puts you in a totally different universe in terms of where job growth is running. So it takes a few more months of data to get clarity on where that actually is.
You're hardwired West Coast or deep into America, like 10 miles into Beverly Hills. Andrew Hollenhorst, on China and our export-import dynamic with China, what does Citigroup see?
In terms of the dynamic with China, I mean, I think we've seen a shift over the last couple administrations, a more hawkish trade policy towards China that will result in some changes in the deficit. We saw some pretty big shifts in the trade deficit ahead of COVID. People kind of forget about that because then we had COVID come in and disrupting things. And I think that this administration is going to make that a focus. That could come through the form of tariffs. It could also come through the form of negotiations with China and maybe get some kind of a negotiated settlement. But that trade deficit probably going to shrink from where it is today.
Tariffs, 30 seconds. Give me your thoughts. You're a PhD in economics.
Two tracks. There's this across-the-board tariff. There's also specific tariffs. The specific tariffs, I think, are more about negotiation.
Okay.
The across-the-board tariff, if you do a 10% tariff, you work through the math, it turns out that's about 1% higher prices in the U.S. if it's fully passed through. This is where the academics come in. Most economists would tell you that tariff is not going to be fully passed through. It's going to be absorbed either through profit margins of domestic retailers or the foreign sellers. So I think we're talking about probably less than 50 basis points on inflation.
All right. Congratulations on 24 months of economics. I mean, it's been great. So your official call is a cut today, and then into next year we pause for a while?
Continue cutting next year. I think we're going to see the unemployment rate continue to rise. January, I think they're back on for a cut. I think it's going to be just like December. A couple of weeks ago, a lot of people didn't think they would cut in December. Now we have it fully priced. I think the same thing will happen in January.
Ken, wake up. Did we get that on tape? We got that on tape.
I'll come back in January.
Andrew Hollenhorst, thank you so much. See you late January with another Citigroup cut. Dr. Hollenhorst is Chief U.S. Economist at Citigroup. We have a spectacular lineup today, really equity-driven on this great bull market. Cam Dawson next.
Markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From the Bloomberg Interactive Broker Studio, I'm Lisa Mateo. It is Fed Day, and futures are advancing ahead of the announcement from policymakers and words from Chair Jay Powell. Right now, NASDAQ futures up 0.2%, 60 points. Dow futures up 127 points. S&P futures up 16. The two-year yield, 4.25%. That's little change. And the yield on the 10-year, 4.41%. And that is little change. To currencies, we have the Bloomberg Dollar Spot Index. That's little change. The Japanese yen down 0.1%. The euro stronger. British pound stronger. We have Bitcoin down 1% at 104,000. Checking back in with our top story, a lifeline for Nissan exploring a merger with Honda, reportedly said to face introduction by Foxconn for a controlling stake. Shares of Nissan, they closed up about 23% in Japan. Honda closed down 3%. Also in the news, U.S. graphite producers, they're looking for punitive tariffs of as much as 920%. This is on Chinese makers of the material used in EV batteries. So with that said, it could place a significant financial cost for companies like Tesla and other EV manufacturers. And speaking of which, Tesla's owner Elon Musk in the spotlight. SpaceX and Musk, they're facing federal reviews for violations of security reporting rules. That's according to the New York Times. That is your Bloomberg Business Flash. Tom and Paul.
Can I do a value add on this crazy Japanese merger?
Yes, please.
The car that you died for when you were starving, had no money, and were looking for quarters under the fold-out couch to go see some, do they play Bob Seger?
Right.
The rich kids had a Datsun 280Z.
Those were
and they're still
cars.
Still cost a fortune, but I don't think anybody under a certain age knows what Nissan is.
No, it's great. And my first
car.
car.
It was the coolest car.
It was awesome. My first car was a 1984 Honda Accord.
Oh,
I got it when I was driving down to Duke to go to business school. My dad kicked in $2,000. I kicked in $2,000. Boom. We had the Honda Accord. It worked great. The transmission literally died on my drive back from graduation on the New Jersey Turnpike. Fifth gear died, so I had to drive back in third gear.
You drove across America in third gear.
Exactly.
That sounds like the story of my life.
Exactly.
Thank you for that. Datsun 280Z. That's what they need to solve the problem at Nissan. Our problem is we have a plethora of equity brilliance today. Jason Trennert to join, Victoria Fernandez, Alicia Levine of BNY, Cam Dawson with us now after Ben later. I said this is the great bull market. When I use the phrase, Cam Dawson, the great bull market, how do you define that?
Well, I would define the great bull market as the great bull market for a few, meaning that if you look mostly in the last couple of weeks through the last month or so, you have seen a big deterioration in the average stock. You've seen the S&P equal weight only up 0.3%. Compare that to the Mag 7 up 15% in the last month alone. So it is a bull market, but it's certainly not a bull market for everybody.
As a strategist, I would think that's problematic, right? Because you need to see breadth in the market to suggest health in the market to suggest maybe this thing can continue to go. How do you talk to your clients about that?
It certainly puts a lot of weight on a small set of names in order to be able to deliver. We shouldn't forget as well that those Mag 7 names are seeing a big earnings deceleration next year. They're going from about 55% growth this year to just 20% next year.
Slacking off.
Slacking off. It's still better than the market average, but the point is, can you see the still the same pace of outperformance as you see that earnings rate of growth slow, which just means that we think we have to look outside of the cap weighted indices, but that does not mean just buying equal weight. And this is important because we do think equal weight still could struggle, but you can be selective within equal weight outside of the Mag 7 in order to find opportunities.
So where do we go? A lot of folks have been suggesting maybe financials in this new political environment, maybe even energy. How do you think about opportunities outside those Mag 7s?
We think value broadly, given the underperformance over the last couple of weeks, is so starkly underperforming that you cannot ignore it anymore, meaning that we think we could get a snapback rally to start the year. It doesn't mean going deep value, dumpster diving into the lowest quality, junky parts of the value sector. That's where we think a lot of areas you are going to see value traps, but we're seeing high quality, value-oriented names trading at mid to high teens multiples, so much less than the market, that are just getting sold because they don't have Mag 7 or AI attached to them.
So, I mean, am I going? Is there something like industrials? So I'll go out and buy a Deere, 3M, things like that. I mean, is that what I'm? Because a lot of folks are saying, hey, we have a better environment here. The new administration, maybe more optimistic economic outlook, maybe more pro-growth. Maybe I buy cyclicals and things like that.
So I used to cover the industrials, and I've always had this notion of we can't have nice things in industrials, because what tends to happen is that you get really optimistic about the future, and they start trading at high valuations. They've done exactly that. Industrials a couple weeks ago were trading at 24 times earnings, so a premium to the market. Okay. So the narratives around reshoring, the narratives around electrification, and all of these pro-growth policies are great, but when you're trading peak-on-peak valuations, it's really hard to perform well.
So I'm going to active manage value pick here, knowing that value's been the dog of dogs since time began. What ratios, what measurements, what distinction do you look at in value? Don't tell me it's PE. Is it cash flow growth? Is there some metric that matters to Cam Dawson?
We think that you have to have that quality overlay in value, because otherwise you find yourself in value traps, the names that are just cheap for a reason.
What's a quality overlay?
So what that defines to is free cash flow generation through a cycle. We don't want big peaks of free cash flow and then it falls. We want high return on invested capital. That's the idea that for every dollar you put into the business, you make more money coming out.
So you're doing a weighted average cost of capital, ROIC comparison.
And that's important because you don't want companies that have to put a lot of capital into their business year in, year out.
Well, that would be the auto industry.
Most definitely.
So, I mean, going forward here, I mean, talk to us about earnings growth. How do you think earnings growth is going to be for the marketplace in 2025? Because I think the market's discounting improving earnings growth.
The market is discounting improving earnings growth for the 493 to a big extent. The 493 has had under 1% earnings growth this year. It's expected to go up to mid-teens next year. And the rubber meets the road in the fourth quarter. That's the first quarter that we're going to see this inflection that's already priced in. Right. We get fourth quarter earnings starting late January. We think that is the first test of this broadening hope.
What's the why of the decline in earnings growth of the cherished few? 50, 40%, whatever the number is, down to a mere mortal 20x%. Is it a sales decline? Is it margin pressure? What's the why of that decline?
At a certain point, keeping up 150% growth rate in a name like NVIDIA is really
difficult. Okay, so it's
difficult.
a one stock. But what about Apple, Microsoft, Google? It's not Alphabet. I got yelled at yesterday because I say Google. I said, it's Google. Get over it.
So here's the dispersion. It is NVIDIA and Amazon that are having the biggest slowdown in earnings growth. Apple, Meta, Google, all of those names have about stable earnings growth going into next year. And it's Tesla is the only one that's having a big acceleration that's priced in earnings growth, which is how you get this dispersion within the Mag 7. And that's why you're seeing the deceleration.
But does Tesla have the persistency of cash flow? It's not really a Mag 7. It's an Elon 7.
It is an Elon 7, and you have seen Tesla's forward earnings estimates get cut by over 50% over the last 2 years, which just means that you start with very high expectations for a name like Tesla, and they just get whittled down lower and lower and lower.
Yet Elon has a great opportunity, or has a great ability to kind of get his investors to focus on something else. Don't focus on making cars.
Why doesn't he rebuild RFK Stadium? Why do the taxpayers have to do it?
That's a great question.
Call it the Musk Stadium.
Exactly. What are we doing in the bond market here? Am I taking credit risk, or do I just sit in a 2-year treasury at 4.25%?
With credit spreads so very tight, we are concerned that they're not pricing in any contemplation for a slowdown. So we think that you have to be highly selective within credit. You have to be actively managed within credit. We do see yields at least through the end of the year being biased higher because of the fears about deficits, but as well as just the technical trends. Going into January, though, don't be surprised if we see a breather in yields coming lower because we hit the debt ceiling. We won't be issuing as many bonds, so classic supply and demand. You could see yields back off some, but lots of wild cards. We think yields will remain volatile in 25.
People don't know your heritage with Ninja Turtles. Are you sitting on the edge of your seat waiting for Mutant Mayhem 2 in October of 2026?
I mean, it couldn't be better. It's a family affair at this point.
Mutant Mayhem 2.
Yeah.
Lisa's The Rock in that one?
I don't think so.
Mutant AM too. Cam Dawson, have a great year. I don't think I'm going to see you again. Goodbye. Cam Dawson with us, some new age. That was brilliant. I mean, this whole value thing, it's been sold down to nothing.
Nothing. You're getting it cheap.
It's almost as cheap as the triple leveraged all cash fund. That's worked out this year, Paul.
Yeah,
Cam
exactly
Dawson,
right.
thank you so much. Greatly appreciate this. On this Fed Day, we did a conversation here that was completely Fed free. Yes, futures up 18, Dow futures up 136, the VIX 15.30. With our news in New York City, John Tucker.
All right, let's start with this. The suspect in the shooting death of United Healthcare CEO Brian Thompson is now facing multiple murder charges in New York. Manhattan District Attorney Albert Bragg says prosecutors have elevated the case against Luigi Mangione to first-degree murder, a charge reserved for the most abhorrent conduct.
This was a frightening, well-planned, targeted murder that was intended to cause shock and attention and intimidation.
Manhattan DA Bragg says Mangione is also charged with 2 counts of second-degree murder, one of those as an act of terrorism. Mangione has 2 hearings scheduled tomorrow in Blair County, Pennsylvania. That's where he's fighting extradition to New York. A Defense Department spokesman says none of the mysterious drones reported over the skies of the Northeast are being flown by the Pentagon or are part of a secret government task. President Joe Biden last night also weighed in, saying there's nothing nefarious, apparently.
There's a lot of drones authorized up there. I think one started and they all got it. Everybody wanted to get in the deal. But we're following it closely.
More than 1 million drones are registered to fly in the U.S., with around 8,500 in flight on any given day, a vast majority of which are recreational or hobbyists used for architectural, engineering, farming, or law enforcement. The Israeli military today ordered another evacuation in central Gaza ahead of an offensive in the area, even as Israel and the militant group Hamas appeared to inch closer to a ceasefire in the 14-month war. And the top of the art auction market plummeted this year, with only 3 works surpassing $50 million, compared with at least 6 in 2023. Only 1 work by a living artist made the top 10, which was dominated by the old standbys, including Monet, Van Gogh, and Warhol. Just try taping a banana to a wall. Global news, 24 hours a day, whenever you want it, with Bloomberg News Now. I'm John Tucker. This is Bloomberg. Tom, Paul, and Lisa.
Some may remember. John, thank you so much. We had an orange with duct tape here.
Yes.
Gagosians picked it up.
Yep.
They have it up on Madison Avenue.
Okay, very good.
There, it's an orange with some duct. It kept falling down.
Exactly.
Finally, we're in the middle of the show, and the artwork fell off the wall as well. Paul, the value growth conundrum. I mean, we make jokes about Steve Colbert and growthiness, but growthiness is the be-all and end-all. If you're in it, you're having a great holiday season.
Yep.
And if you're not, you're like, what's next?
I don't know. I've been in this thing since the mid-'80s. It's always been about growth at a reasonable price. We used to call that GARP, or just momentum growth. I don't know how you play it, but the value investors you talk to, and they are out there, and they are very good at what they do. But they just don't have the windows for value to work. Seem to be few and far between, and they're pretty short. But when you do hit them, they can have some performance there, and that's what we see from some of those value investors out there.
Let's do this right now, folks. We're at the Bloomberg, and we have incredible technology people worldwide, foundational, who give us spam protection. But some stuff gets through. Thank you for ordering with us. Your order has been processed. Be careful out there with spam. John Tucker, do you get spam at home from people trying to take your money?
Oh, all the time.
All the time.
I get spam from my kids trying to take my money.
Like the Zelle thing. We had Brian Moynihan in a conversation yesterday. The Zelle thing, they're constantly sending me notes. Be careful of Zelle scams.
Yep.
Here's one right in front of me. It got through our incredible technology people.
Yeah, absolutely. So
they want me to send them $64.02. I said, go see Tucker.
I don't have it. I would.
Be careful out there, folks. The spam thing is serious. And talk to your kids about it. I try to.
Yep.
Afterthought ordered something from Hong Kong the other day. 120. I said, where'd that go? I don't know. Bloomberg Surveillance. Good morning.
Markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From the Bloomberg Interactive Broker Studio, I'm Lisa Mateo. We've got futures pointing to a higher open on Fed Day. Our special coverage begins here at 1:30 p.m. Be sure to tune into that Wall Street time. NASDAQ futures up 0.2%, 53 points. Dow futures up 135 points. S&P futures up 16. The 2-year yield 4.26%. That's up 1 basis point. The yield on the 10-year 4.42%, and that's up 1 basis point. To commodities, we have Brent crude up about 0.7%, $73 a barrel. WTI crude $70 a barrel. We have spot gold lower at $2,645 an ounce. The Bloomberg Dollar Spot Index is little changed. Who's making news? That will be Wal-Mart. It's headed for its best year since 1998. Its shares have surged 82%, adding more than $340 billion to Walmart's market value in 2024. And we now have a better look at just how much money Instagram brings in for Meta platforms. eMarketer estimates that Instagram will soon account for half of the company's advertising revenue in the U.S. alone, topping $32 billion next year. That is a Bloomberg Business Flash. Paul and Tom.
Lisa, thanks so much. You're talking about Bentonville. None of us have been there, Bentonville, Arkansas. We got to get French Hill in here.
Yeah.
New job at Congress, head of a House Financial Services Committee.
Is that right?
Yeah, it's like a real job.
Yeah, certainly.
We'll have Congressman Hill in here, Chairman Hill, I should say, at some point. Cam Dawson says she's been to Bentonville.
Yeah.
Says it's lovely.
Yeah, I'd love to go.
Yeah. We should,
I mean, extraordinary company. Extraordinary
company. See if we can do a remote from Bentonville. I think it works out. Get all the Walmart analysts. And 20-year track record, Walmart, 11% per year.
Wow.
You're making 2%, 3% net clean.
Yep.
You got revenue growth of what? 5%?
Yeah.
Maybe.
GDP plus.
Maybe 6%.
Yep. GDP plus.
And they're popping at 11% total return.
Yep.
And pretty consistent.
Yep.
As well. She had she was upset. Lisa was upset because we got to her so late yesterday on the newspapers.
Her people got to
Let's do this.
Now, a look at the front pages. What's making news around the world? Your daily roundup of today's headlines from major publications.
The daily look at the front pages, the Lisa Mateo Show, is brought to you by Oppenheimer. Oppenheimer, they focus on the power of their thinking on you, creating customized plans to help achieve your goals. Put the power of Oppenheimer thinking into your investing. Call an Oppenheimer professional today. We think Oppenheimer this morning. Lisa, what do you got?
Okay, more protests surrounding the Paramount and Skydance merger. Now you have the Center for American Rights. It's filed a petition with the FCC. They're citing potential foreign influence and bias. What am I talking about? Okay, so this said that an investment in Skydance by the Chinese company Tencent, it raises questions about foreign influence over the U.S. media. And then they're saying that Paramount CBS News division has a track record of ideological bias and also lacks diversity in its hiring practice. But I don't know, is this merger going to be approved by the FCC? I mean, they're saying most of it, likely, it is.
In my personal opinion, having followed the media industry for 35 years, zero risk here of it not being. I mean, Skydance is just...
Is it a real estate play? Like, they show the Paramount Studios.
It is a great lot.
That's like, if they bulldoze it, it's worth a lot of money.
It is. I mean, there's that as well. We saw that with the Fox lot when Disney bought 21st Century Fox. A lot of value allocated to that. But it's just, it's a... Skydance looking to get into the media business. It's the son of Larry
Ellison.
Ellison
Rich
looking
guys
to get
want to make
movies. Exactly. And
it's still that way.
And it's Sherry Redstone looking to get out as quickly as she possibly can to anybody that'll write a check. And that's how this deal came about.
Did it change the industry? Did it change streaming? Did it change Warner Brothers Discovery's discussions?
No, this new company, this new Paramount owned by Skydance is now going to have to think about, okay, now what do I do? I probably can't stand alone. I probably need to talk to Warner Brothers Discovery. I probably need to talk to some other media companies about getting bigger.
Tim Cook out yesterday with the lead actress, I think her name is Ferguson, excuse me, I'm so sorry I don't know it. The show Silo I watch on Apple. They extended it for season 3.
There you go.
Season 4, and they have the lead actress in Tim Cook. I think they're sort of on the set of Silo, and she's thanking him for the gazillions of dollars Apple spent on this show. And he said he's addicted to it. Okay, I mean, it really helps if the head of Skydance is
Exactly.
addicted to your product, right?
Exactly. Tim, I mean, Apple's got the money. And
Who greenlit the red one with the rock?
Yeah, I don't know. I think that was
Next.
Lisa Mateo.
Still trying to get through that one. Okay, holiday party season, right? So how do you behave?
Please tell us.
The Wall Street Journal has a whole detailed, a
Really?
few examples of what you should and should not do. So they're saying a work party is another day from work. You're not kind of off duty, so just be careful. Yes, the drinking, the dancing, the flirting, and you can get fired for some of that because it is a work function. What you wear. Expect the usual office dress code, if slightly less formal, bow ties included, okay? And it says, heed the hierarchy. Make a point to acknowledge, perhaps thank the boss. So if you're going around, say, hey, thanks for, for the great year. Mingle. Here's the thing, mingling, right? Don't
hate to
linger and don't hover.
I can't stand in the corner next to the bar?
No, and you can't be on your
okay.
phone. That's the other thing.
That's the other
You
thing.
can't isolate yourself.
I'm not very good at that.
You have to mingle.
Okay.
No, you're good at that.
You can dance.
You can
But don't get
dance.
carried away, Tom, okay?
No.
Can I say something about this? The guy that wrote the article at the Wall Street Journal
Yes.
on Party Times is one of the smartest guys I ever met. Paul Podolsky was, I think, at Fleet. My mind's, this is like back when they were throwing tea into the harbor. But Paul Podolsky was there with two other guys, Greg Anderson, at the bank, and they wrote a morning memo that was so smart, you stopped at 7:02 a.m. when they released that memo. He was legendary for writing cross-asset, smart memos. Paul Podolsky at K Capital, good morning. And he's a party monster.
Exactly.
Have you ever
so
gone
there
to
you
three
go.
parties in one evening?
No, he has.
That's like work. You take the beverage. They all want to give me a martini, and you touch it to your lips.
Oh, you pretend.
You pretend. Yeah, you can't get through the evening if you don't. I wouldn't get out of the first party, but but it's part. It's very difficult. Next, what do you got?
Oh gosh. Okay, so we did that. So we were talking yesterday about the malls. You were asking me,
Yep.
how are the malls? Are they crowded? Are they not crowded? So apparently, this from Women's Wear Daily. They spoke with the head person over at Simon Property. They own a lot of the malls. And they said how their recent traffic figures shows that they're starting to see growth. How? Basically, what they're doing is they're turning malls into more like a community. So they're adding luxury apartments, hotels. They're adding gyms like a Lifetime Fitness. They're adding grocery offerings, more food and beverage, more restaurants because they want more people to go. And also they said, it's all about the, quote, experience. So family and kid play areas, mommy and me yoga.
Okay, is there a 17-year-old play area? Remember
No.
your parents screaming at you, and you're not going to the mall. Lisa, you were there. How many days a week were you hanging out at the mall?
That was
in
the
front
place
of
to
Toys
be.
R Us?
That was the place to be, the mall.
Is it still the place to be?
But
I don't
it's
think
a
so.
lot of the kid, like the teens. The parents just come, drop them off, and
Short Hills
enjoy
Mall?
the day.
Boom.
Yes, enjoy the day, enjoy the Apple Pay, and have fun at it. But it's about becoming a community, and that's how they're keeping the malls alive. To keep
The
people
interview
coming.
we had yesterday with, I'm going to make it up, Bert Crouch, was it?
Yeah.
Invesco
Yep,
was
yep.
brilliant.
Yep.
He was brilliant.
Yeah.
He just said the gloom is not as bad as people think.
Right.
Yeah, no.
You got one more for us?
Last one. Oh, yesterday we told you about the Amazon return to work 5 days a week policy that starts next month. Now AT&T, they're saying their policy kicks in the new year, 5 days a week. They've been doing the hybrid schedule for about a year. So the thing is that now there's talk. You have Reddit users on the AT&T subreddit. They're saying that, well, you know what? There's not going to be enough room for all these workers to come back. The same issue that Amazon is having is that they're bringing all these people back, and there
Right.
might not be enough room. So that's one of the issues there for Amazon. But a lot of people are saying it's even harder to find a
AT&T is
job
a
that's
huge
remote.
employer in the state
Yeah.
of New Jersey. That'll
Yes.
be interesting to see how that plays out.
Interesting. I have no idea how this plays out. It's one of the great mysteries for
Yep.
me. Okay, folks, 3 a.m. meeting. We got 22 people in the room, 4 interns. Some of them are hungover, but hey, it was a 3 a.m. editorial meeting. One of our people goes mental because they've lost their iPhone. If you lost your iPhone, or you use Find My to find it and put it in lost mode to protect your personal information. Think your iPhone is nearby. I mean, there's like 3 pages of what to do. Please, Paul, tell us what you do when you lose your iPhone.
Oh, my God. I had my good friends Billy and Pat right out there. They were looking. I mean, these guys ran the NYPD. I had them on it. They were doing a clear sweep of the 5th and 6th floors. You know where it was?
Did you call the
It was in the bathroom.
Did you call the heads of Uber and say,
exactly.
I don't care, it's Paul Sweeney. Find my
the
phone.
Utah people took care of me.
What you do when you lose your iPhone, you're living on a prayer. Good morning.
This is Bloomberg Surveillance with Tom Keene and Paul Sweeney.
What do you say to people scared stiff in cash?
We've got an administration, presumably, that will be pro-business, lower taxes.
With Lisa Mateo on markets.
AI affecting demand for cloud computing.
And Michael Barr with news.
U.S. Secretary of State discussed the conflict in Gaza.
The best in economics, finance, investment, and international relations. This is Bloomberg Surveillance on Bloomberg Radio.
Good morning, everyone. Paul Sweeney, Tom Keene, Michael Barr on assignment after the Lions lost. Lisa Mateo with us after that spectacular newspaper segment. We welcome all of you today on YouTube. Subscribe to Bloomberg Podcast, growing each and every day. I haven't figured out YouTube yet. I'm working on it. Have you figured it out, Paul?
I think so. And as
it's amazing.
And I know the folks at Google, they love the cash flow.
And it's growing. There's like different YouTubes. I have YouTube Premium. I pay with it with my own money, and it's really clean and really simple.
And it's not cheap, Tom.
There's regular YouTube, and then there's YouTube TV.
Yep.
Which
exactly.
They just raised the price on.
They did.
Yeah, I don't have that.
It's a cash cow for those folks.
Anyways, we're on YouTube, and we hope you join us out there. On your commute, Apple CarPlay, Android Auto, good morning, as well. Sirius XM channel 121.
Yep.
I had no idea. They briefed me on it like yesterday.
Yeah, exactly. It's huge.
We got some real people getting behind us here on Sirius XM. We'll tell you about that into 2025. Good morning, 99.1 FM. David Gura, a conversation with the Secretary of State. Look for that tomorrow. With Secretary Blinken, he'll be in New York. Gura, I'm sure, will grill him in an impolite way. Good morning, 92.9 FM. Boston Bruins won. That's all you need to know. And 11:30 in New York. Good morning. Alicia Levine with us in a moment. Nice. Bloomberg Surveillance this morning brought to you by Cohn Resnick. Advisory Assurance Tax. Discover game-changing strategies to maximize value, optimize performance, and manage risk. Put your business at the forefront. We say thank you to Cohn Resnick. From the Interactive Broker Studios of Bloomberg Business, Fed Day brief. Lisa Mateo.
It is. And ahead of that, we got futures pointing to a higher open. Right now, NASDAQ futures up 0.2%, 53 points. Dow futures up 145 and S&P futures up 17. The 2-year yield, 4.25%. That's little change. And the yield on the 10-year, 4.41%. And that's up 1 basis point. To commodities, we have Brent crude $73 a barrel. WTI crude $70 a barrel, up nearly 1%. And spot gold lower, $2,643 an ounce. The Bloomberg Dollar Spot Index is little change. And cocoa futures hit another record in New York, climbing above $12,000 a ton. Now, shares of Nissan jumped the most on record. It closed up 23% in Japan. It explores a merger with Honda. And sources telling Bloomberg that deal could be expanded to include Mitsubishi Motors. And that Foxconn approached Nissan about taking a stake. A lot involved here. Honda closed down about 3% in Japan. And we're not done yet. Renault, Nissan's largest shareholder, said to be open for its partner to pursue in those talks with Honda. That is your Bloomberg Business Flash. Paul and Tom.
Lisa, thanks so much. It has been far too long. Alicia Levine of BNY brings an absolutely prodigious mathematical, almost cross-mathematical skill into investment analysis. We go Euclidean with her right now. Ben Laidler's talking about third year, could we go up 20% again? Can you be that bullish about 3 years of big double-digit growth?
So in theory, I could be, but in our 2025 outlook, we're up about 10% for next year, simply because it is the third year after the bottoming of the bear market. And typically in that third year, you just don't have those huge gains that you see in the first year out from
Is it
the
a
low.
multiple expansion or the earnings pick
So
up
it's
to help
earnings.
out?
So we're at, as you know, we're at 22 times forward earnings. So we're looking for earnings to really carry, because the multiple was up about 3 times in the last year. There was, okay earnings growth, about 8%, and the rest was the multiple. So you need earnings now to really kick it. And that's what we see. And you're not going to be up 20% in earnings.
I'm sorry, I'm coughing. I choked on my tang. Excuse me.
Exactly. Alicia, we haven't had a pullback, and I can't remember how long. I mean, I guess you go back to July, and it was 8 or 9%. But
right. in 2 days.
Yes, exactly. That's not healthy for a longer-term bull market, is it?
So the average drawdown, even in years where you're up 20%, is actually about 12%. Okay, so this year the most we got was about 8%. So it's very easy, steady year of gains. I think next year you're going to see more volatility. We do think the year ends higher. We're at 6,600 for the end of the year. But I just want to take everybody to the Wayback Machine and think about the late 90s when the Fed cut into a soft landing, when there was no recession. We had 5 years in a row of 20% plus growth. Okay, so if we're really thinking about it, our view is we're not heading towards a recession. The Fed this year alone is cutting 100 basis points. Even if they can't cut as much as they projected back in September, we think with the inflation picture they're not going to be able to. The growth picture is better than expected. You could see a third year of really nice returns in the S&P. There's historical precedent for it. We just think it's more volatile with different policies coming through with the new administration.
Did you guys change your outlook for investing in 2025 given what we saw in the elections just last month?
So we've been bullish for about almost 20 to 22 months here. We took back.
I thought you were going to say 5 years, but continue.
Well, we like everybody else, given history, thought when the Fed's cutting this quickly, they're bound to break something. But really, it was the Silicon Valley, the saving of the depositors from the Silicon Valley crisis and the standing up of all those lending facilities at the Fed that sort of stopped the financial crisis that would lead to a recession. So after that, we got bullish. We've been positioned overweight, U.S. large cap for a long time.
Right. And you still are?
We still are, and we, 2 years ago we we went to a large underweight on international and emerging markets, and we've kept that because we think in a world where the Fed can't cut as much.
Stop it! You're not playing fair rules. You've got Jeffrey Yu. I mean, that's all that's all you got to know. You don't have to think about this. Jeff, what do we think? Thumb up or thumb down? That's the real world.
And we speak all the time.
You're too young to remember this, but the late 90s, folks, there was a modest technology overlay. Sweeney and I woke up in March of 2000 or 2001 and said, oh, there's no profit. What a shock. we have the same technology overlay right now, but we've got profit with it. Is that the theory?
The theory is the profit is better. Let's go back to the late 90s. Starting in the late 90s, you saw a steady increase in the operating margins of the S&P, which created a higher multiple regime for the S&P. If you just go back in time and you get your average of 16 times forward earnings, well, your margins were also 9 and 10%. Now we're looking at 13.5% for next year, and that's because it's being driven by the cash flow of tech. And so companies are healthier. It's not just earnings, it's free cash flow margins are better. It's keeping the multiples higher. You've got a healthier market. And the pricing of tech compared to the rest of the market on a relative basis is actually lower than it was in 2021, 1999, and other periods where there was a tech boom or a technology change where the market got excited about a technology change. So it's relatively less expensive given free cash flow margins and earnings.
Alicia, are you concerned about the lack of breadth in the market? S&P, SPX versus SPW, the equal weight, a real divergence there, which has actually widened out a little bit here in the last few months. Someone with your experience, does that concern you?
Look, it's a risk. It's a risk because then you need those top 10 companies to keep on performing. I also think, and we've talked about it in the context of, well, why do you still like U.S. large cap? There's a lot of talk about, overweighting small cap because of the Fed cutting and a boom of cutting regulations. That's all true. There's sort of a safety trade, and we've really seen this in the performance of NASDAQ versus the Dow. Over the last, let's call it 10 days, the Dow's down 3%, NASDAQ's up 3%. These stocks are safety stocks because they have so much earnings.
Okay, this came up at the dining room table over a beverage of my choice. Is Apple a utility? Now, it's not Dominion Electric from a few years ago or even Con Ed, but does Apple have utility characteristics in terms of persistency of cash flow?
Yes, and they pretty much, like the tops, the Magnificent
They have an inertial
Seven,
force.
They have an inertial force. It's the safety play. Look, when rates get to 4.5% and 5%, what are you buying? You're buying large cap tech because it's relatively immune because they don't have to borrow to grow. And you see it. I mean, think of what happened yesterday. Small cap was terrible, and NASDAQ was down, but not that much. And that's what you're going to see in these rate fears that you're going to get because of rate volatility, the inflation reads, and the Fed statement today, for instance.
We got 10 seconds. Does BNY let you put an SPX target out?
Yes, 6,600 end of 2025.
But is that going to go up here in the next 8 seconds so we can make some news?
Yes, it's good. Yes, I think the first quarter actually could be very good. There'll be a lot of liquidity in the market. So
You're going to be in New York the first quarter? Thought you'd wander by?
I'm going to be here all the time.
Living on airplanes, Alicia Levine, thank you so much. With BNY, just brilliant, her mathematical construction, the geometry of her construction of the market.
Chicago.
It's just, she got like 8 degrees in math. And, she took like differential equations. She's spouting them at the dining room table with her kids. Her husband's looking at her going, would you shut up? I don't need Diffie Q at the dining room table. Futures up 19 on Fed Day. With our news in New York City, John Tucker.
All right, Tom Paul and Lisa, the Defense Department says none of those mysterious drones reported over the skies of the Northeast are being flown by the Pentagon. Even President Joe Biden Tuesday night said, we're following this closely, and so far, he says, no sense of danger.
Nothing nefarious, apparently.
At the Pentagon, Major General Pat Ryder telling reporters top department officials take seriously any cases of drones near or over military sites, though he added this was not a new concern. He also said the government isn't conducting any sort of secret tests. Well, criminal charges have been filed in New York against Luigi Mangione, the man accused of killing United Healthcare CEO Brian Thompson. He's now charged with first-degree murder as an act of terrorism. Prosecutors say the charge reflects a belief he killed Thompson to evoke terror. And New York City Police Commissioner Jessica Tisch said she had a message for those who've celebrated the crime.
There is no heroism in what Mangione did. This was a senseless act of violence. It was a cold and calculated crime that stole a life and put New Yorkers at risk.
Mangione could give up his fight against extradition that would bring him back to New York to face these new charges by the end of the week. Russian authorities detained an Uzbekistan national on suspicion of killing a top general in a Moscow bomb attack, who say he's been recruited by Ukrainian security services to carry out that assassination. The general was the most senior Russian commander to be assassinated deep inside Russia since the Kremlin began its invasion of Ukraine. And the motive for a shooting that killed a teacher and a student and wounded others at a Wisconsin school continues. Madison Police Chief Sean Barnes says they're looking at everything.
Identifying a motive is our top priority. But at this time, it appears that the motive was a combination of factors.
He appealed to the public to share what they might know about the 15-year-old girl who attacked a study hall before shooting herself. More delays for that SpaceX crew still stuck on the International Space Station months after their mission was set to end. Sonny Williams and Butch Wilmore traveled to the space station back in June on board Boeing's Starliner. They were scheduled to return home the following week. Starliner developed some problems. A new SpaceX rocket was set to launch this coming February to finally bring them home, but now NASA is pushing that mission back until at least late March, citing the need for more preparation time. Global news, 24 hours a day, whenever you want it, with Bloomberg News Now. I'm John Tucker, and this is Bloomberg. Tom and Paul.
John Tucker, thanks so much. What's a drone update? We seem drone-free today. Are we done with drones?
Well, no, President Biden didn't weigh in it, as I said, for those who actually listened to my newscast last night. He said there's nothing nefarious, and the Pentagon says it ain't us, and we still take seriously all this stuff. But they pointed out there are thousands of drones fluttering around everywhere, every day. So
get used to it.
Up in Boston, they had 2 kids out on Long Island. Yeah, we'll see. Bloomberg surveillance. Good morning.
Markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From the Bloomberg Interactive Broker Studio, I'm Lisa Mateo. We've got futures advancing, investors waiting for the Fed's final policy decision of the year. Central Bank expected to lower rates by 25 basis points with a focus on Chair Jay Powell's thoughts for January. Now, ahead of that, more economic data with a read on housing starts and building permits. That comes out in about 15 minutes from now. We have NASDAQ futures up 0.2%, 48 points. Dow futures up 0.3%, 161 points. S&P futures rising 0.2%, 17 points. The 2-year yield 4.25%. That's little change. The yield on the 10-year 4.41%, and that's up 1 basis point. The Bloomberg Dollar Spot Index is little change. We have the Japanese yen down about 0.3% at 153.93 against the dollar. The euro little change. The British pound little change, and Bitcoin right now down 1% at around 105,000. To earnings we go. General Mills reaffirmed its organic net sales forecast for the full year. Shares are racing those gains, down about 3%. Then after the close, we go on to home builder Lennar, Micron Technology, and a few companies making news before we go. UniCredit increases holding in Commerce Bank to about 28%, and Boeing resumed full jet production in the Seattle area after a strike. For on-demand news 24 hours a day, subscribe to Bloomberg News Now, wherever you get your podcasts. I'm Lisa Mateo. That's a Bloomberg Business Flash. Paul and Tom.
Lisa Mateo, thank you so much. It is Fed Day, and we're not going to drown the moment in Fed chat with Jason Furman, professor of practice of economic policy at Harvard, teaching Ec 10 and great on policymaking as well. I can't say enough about his contribution to the zeitgeist over the last year or two with his ecumenical study of our inflation rate. It's the number one value add out there. I retweet it out always, and today we're going to do a conversation with the ecumenical Jason Furman. Jason, I was talking to Chairman Bernanke at one point, and we talked about hockey stick charts, or Olivier Blanchard at AEA a number of years ago after a great financial crisis with a jump condition to lower growth and then the glide path back. Your language right now is that we're at a hinge moment in the American economic experiment. Discuss what that is. What's a hinge moment and why is it now?
Yeah, so it's great to be with you as always. The plane was coming in. It looked like it was landing, and it is still just sort of hovering above the landing strip. It's not that far away. All in, I think I'd be quite happy about where we are in the economy, but we're not making progress anymore towards the Fed's 2% goal. And so the question is, are we going to, cut inflation by a couple tenths, in which case everything is happy, soft landing, interest rate cuts, champagne, everything? Or do we go up a few tenths, in which case maybe the Fed has rate increases back on the table? And right now, what happens on 1600 Pennsylvania Avenue will have some effect on this as well.
That's kind of where I wanted to go, Jason. I wondered just kind of if your view of this U.S. economy, maybe even the world economy, did it change at all after the U.S. elections last month?
Look, like a lot of people and like the markets, I mostly was discounting President Trump on tariffs, thinking they were negotiating tactics, that yes, we're going to get more tariffs on China, but we're not going to get something broad-based on other countries. With each passing day, he's either a better and more credible negotiator than I realized, or actually believes what he's saying and is likely to follow through and do it. So I've gotten more nervous about the actual possibility of tariffs. I think some things like the Fed, he's been better about. Scott Bessent and Kevin Hassett were very reassuring as picks, but I think the big one is the tariffs, which he has a lot of ability to do all on his own.
Tariffs go into just, I guess, a broader conversation of internationalism. I mean, I kind of came up in this business where it was increasing globalization across the board. The world got a lot smaller, in large part thanks to technology. But boy, the last 6, 7, 8, 9 years, not just in the U.S. but around the world, it seems like nationalism is replacing internationalism. Is that something that is a plus or a minus, or how do you think about that?
Yeah, I mean, one remarkable thing, you're absolutely right in your diagnosis. But one interesting thing is for the last 10 years, wages have been growing more at the bottom and the middle than they have at the top. We've actually had a compression of wage inequality. We've had, pretty decent income growth over the last decade with some serious ups and downs, especially in the inflationary period. Productivity growth in the United States, at least, has actually picked up. So in a lot of ways, things are working. They're not working perfectly. They're never working perfectly, but they're working pretty well, which makes the turn away from globalization and the timing of it, at least in the United States, somewhat surprising.
Jason, let's clear the air here, and I think it's really, really important. Paul's good question on the future with the Trump administration. Kevin Hassett maybe is going to drive the economic boat for President Trump. We'll see on that. He's out of Penn with Alan Auerbach. You're out of Harvard with Greg Mankiw as well. On the Venn diagram of Hassett-Furman, Furman-Hassett, how much do you and Kevin Hassett agree upon in economics and policy?
We agree on an awful lot. I'd say the main place we disagree is taxes. He would like lower taxes, especially on corporations and capital. And I place more of an emphasis on productivity, and I'm more skeptical about some of the larger growth numbers that he would believe in, although I think taxes do matter for growth.
I can't emphasize enough, Paul, how this is misconstrued in the media. They want Hassett to be completely opposite of Furman. And it's just not the case. They got a substantial overlay around the things we discuss each day.
And Jason,
look, recently I did a thing with him where he was defending the Fed's 50 basis point cut, and I was saying they should have done 25, back in September. So, sometimes the positions aren't even what you might predict.
And Jason, just, on the tax front here, it seems like that likely is going to be something that this administration is going to want to extend the 2017 tax cuts. How do you think that could play out, should play out, will play out?
Oh, look, I think they're going to extend them. The question is for how long. I think that's a real shame. There's a number of people that think you should use what's called the current law baseline, that you shouldn't add to the deficit as measured by CBO. If you extend those tax cuts, you're basically locking in deficits of at least 6% of GDP, probably 8, 9, or 10% of GDP over the coming years. And that's just not a place we should be now. In 2017, I didn't think we could afford the cost of the tax cuts. In 2025, it will be even less affordable given where the debt is, given where interest rates are.
Matt Winkler, our Emeritus Editor-in-Chief, Jason Furman, just did a summary of the facts of the Biden administration. And, it was very much pro-Biden. And, of course, you've got a Democratic Party shingle out as well. Is President Biden's legacy completely overwhelmed by the growth of the debt and the deficit?
That's a part of the legacy. And that, by the way, played into things like the higher interest rates we have now and higher mortgage rates, which, by the way, were probably part of what was going on in the election in November. There was a very strong economic recovery. That's on the plus side. I think we overdid it and got too much inflation. That's on the minus side. And the inflation, I think, is underappreciated, how it's eaten other parts of the legacy. For example, the cost of infrastructure has gone up more than spending on infrastructure. And so in real terms, it appears that we're investing less in many areas of infrastructure than we were before.
One final question. Are you the Grinch and you gave holiday reading, forced hundreds of pages of reading to Ec 10 at Harvard?
I gave them their final grades for the course and sent them away. There was listed some optional reading, but no one's going to ever check on that.
Okay, great inflation guy. Mankiw was brutal. He dealt out C's like they were French mints. Did you give out any C's, Professor Furman?
We did give some C's. We even gave some D's. I don't want to talk about anything below that, but we try to roughly match the average grade in comparable courses. I don't want to penalize people for taking economics compared to something else, because I think everyone should learn economics.
That's a whole story in itself, folks. Jason Furman, of course, and I can't say enough again about his work in describing inflation away from the blather with his ecumenical analysis of inflation. Professor Furman doles out C's at Harvard. Futures up 19 on this Fed Day. Our coverage begins at 1:30 from New York City. Bloomberg Surveillance.
Markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From the Bloomberg Interactive Broker Studio, I'm Lisa Mateo. It is Fed Day. Futures in the green. This is ahead of the announcement from policymakers. Words from Jay Powell. Economists expect the Fed to lower borrowing costs for a third straight meeting while signaling fewer interest rate cuts next year. So we have NASDAQ futures up 0.2%, 49 points. Dow futures up 190 points. S&P futures up 18. The 2-year yield 4.25%. That's little changed. And the yield on the 10-year 4.42%. And that is up about 1 basis point. To currencies, we have the Bloomberg Dollar Spot Index is little changed. And we have more economic data coming in. We start with housing starts. The survey was for 1.345 million, came in a tick lower, 1.289 million. Then you get to building permits. The survey was for 1.430 million, coming in at 1.50 million. So you see the difference there, just a little bit higher. All right, let's check back in with our top story. That lifeline for Nissan exploring a merger with Honda. And Foxconn has also reportedly approached Nissan about taking a stake. So you had shares of Nissan closing up 23% in Japan. Honda closed down 3%. Also in the news, U.S. graphite producers seeking punitive tariffs as much as 920% on Chinese makers of the material that are used in EV batteries. And that news, well, it could place significant financial costs on companies like Tesla and other EV manufacturers. That is your Bloomberg Business Flash. Paul and Tom.
Lisa, thanks so much. Not that much of a reaction in the market. I'm going to call it secondary data. The revisions come in. Housing starts revised fractionally lower, and of course the number pretty grim as well. 2 back-to-back negative statistics on housing starts, I guess, get your attention. Futures up 17. The Sweeney yield, the 2-year, pretty much on 4.26%. Maybe the Fed outweighs the economic data today.
See what we hear today.
See. Our economic indicators are brought to you by IBKR. With Interactive Brokers Forecast Trader, you can trade your views on key economic and climate indicators. Visit ibkr.com/forecast and get started today. Thank you, IBKR, for your interest and support of our conversation with Victoria Fernandez. In from Houston, Chief Market Strategist at Crossmark Global. What are you hearing from Crossmark clients? Like, there's got to be 2 groups. Those that are in the game, double figure, double digit, things are great. And people going, why am I on the outside? How do those 2 groups dovetail in to the end of the year?
Well, if there are clients, we're making sure that they are in the game. We do think path of least resistance is higher, at least in the near term, in the equity market. So we want to make sure our clients are fully invested. Now we're careful on where we put that money to work within the equity market, and we spread some of it out. We put some in the fixed income markets. If we, we don't think yields are going to go tremendously higher from where we are now. So can we lock in some rates there and have some cash flow for our clients? Yes, we do that. So those are our conversations. We think you've got short-term tailwinds for the economy. But there's a lot circling kind of under the surface that we think will kind of start bubbling up in the spring of next year. But we want to be ready for that, and we can by how we position.
How concerned are you, if at all, about the lack of breadth in the equity markets? The SPX up 26-27%, the SPW, the equal weighted mid-teens kind of. I mean, how concerning is that to you?
Yeah, and you look at, decliners versus advancers 12 days in a row, that we're seeing that breadth coming down, but at the same time, Paul, that sentiment is going higher, right? Bear-bull ratio higher as breadth comes down. That makes me a little bit nervous. You want to see those 2 go together, gives you a little more confidence in the market. So I do think you have to be concerned. There's going to be some volatility associated with that. You look at the concentration that you're seeing with the top 10 names in the S&P at 34-35% right now, and it's a lot of those tech names that were leaders before and are doing so again. But I think you have to be a little bit cautious with the breadth continuing to decline.
All right, I know he's in those Mag 7. He's been clipping coupons the whole time. I haven't. I'm hearing financials, particularly after the election.
Yes.
Financials have been something that I hear a lot more about. How do you guys think about that sector?
Look, financials has been something that we have loved all year long, and we've talked about. I know it was a little bit contrarian in the beginning of the year because they had such a pullback, but it was a great opportunity. We look at balance sheets, right? If Bob Dahl was sitting here next to me, our CEO, he'd be saying it's the balance sheets.
You're not allowed in the same room, right?
Balance sheets and cash flows, and we're seeing that in financials. Add to that a positive sloping yield curve, potential for loan growth, deregulation. I think that all kind of comes together and says financials can be
Can
good.
I go Texas on you?
Absolutely.
Michael Dell, good morning. Michael Dell's a lovely supporter of the program. Dell Computer from the October low 2022 is up 245%, even with the recent pullback, up 77% per year. So somebody local wanders in, they're thinking of giving an endowment piece to Texas A&M, and they got Dell Computer. Can you tell them to sell Michael Dell?
We can probably suggest they trim a position, right? We can help them work out of a position that's overweight in their portfolio.
What's wrong with being overweight Michael Dell or Tim Cook?
I don't think you want to be overweight versus the index in any of those tech names right now. They are such a huge component of that index. Look, Apple is probably our largest weight. Apple and Microsoft kind of went back and forth for a long time as being our largest weight, but we're still underweight the index in those names because we want to have that diversification in the portfolio, and they've had such a big run. Trim a little bit, from here, take a bow, get a little bit off the table and put it in maybe industrials or financials.
I'm watching Landman, so I consider myself an expert on the global energy space. You're in Houston, the absolute center of the U.S. energy business. What's the feeling in Houston these days about the energy space?
Yeah, I mean, you look at where energy is as a sector, it's down there towards the bottom, right? It's not performing really well, and we see Brent and crude low 70s right now. But a lot of it has to do with the supply concerns that are there. You look at OPEC Plus saying they're going to continue to hold back supply, but you have a new administration coming in saying we want to increase energy production, which is disinflationary.
So what's the cross-mark call on this? To me, nobody's talking, Paul, about $59 West Texas Intermediate. Is that feasible, Victoria Fernandez?
I would never say never. I think it can be. If our supply goes up tremendously and you couple that with OPEC holding back supply, you could see that come down. That's not great for the oil companies, and I think you're going to see some of the people like the Saudis start to really try to gain market share then, knowing that they've got to have about $90 oil to break even.
Yeah, I mean, I've learned, again, from Landman, I'm learning so much. 60 to 90 is kind of a comfort range.
Mrs. Keene's going to watch this thing
for the Texas people.
It's good. And you've had a lot of shorts come in and get covered in the energy sector over the last couple of weeks. So I think that's another story that kind of tells you maybe we're stabilizing.
This is Regina Mayer of KPMG down where Victoria's from. Yeah. And I said, is the Landman the manly Midland? Is it still the stereotype? Or is it something? She was heated that it's a myth. I mean, Landman is trading off Hollywood and a myth.
I love it.
Are there really hunky oil guys out there in West Texas?
Of course there are. There's hunky oil guys all over Texas, right? Exactly. They're still there, but obviously Hollywood has to put their spin on things. But what I think probably upset her is Texas has become a much more diverse economy than just being oil and gas. And a lot of times that doesn't get picked up. But, look, Yellowstone's done. People have to watch something. Landman it is.
Okay, I got one final question. This is too cool for school. The Fighting Texas Aggies walloped Purdue in basketball. Are they the real deal? They're ranked 12th in the nation. Are they the real deal now?
Yes. Let's go, Gig 'em Aggies. Let's see some good basketball games coming up.
Because she got her MBA from the Mays School of Management. The Mays School of Management Business is from Lowry Mays. And Lowry Mays was the founder of Clear Channel, one of the largest radio, outdoor advertising, and entertainment companies, Live Nation. Lowry Mays created Live Nation back in the day. He was my biggest client for many, many years. A wonderful, wonderful man.
Wonderful man.
And a wonderful business school.
Yep.
And you, Paul, you will love this. I'm in a meeting with 20 people in Lowry, and he's pitching us he's got the hat on, the Texas thing. I mean, Victoria's living this every day. And Lowry's there, and I raised my hand, and I asked him something about EBITDA or something. He says, Tom, you're not allowed to ask questions. And that is the gentleman of Clear Channel. So what happened to his empire?
He sold out at
I heard.
Yeah, not at the absolute peak, but he got a great valuation for him and his family. He recently passed, but his sons are running it. They have a great family office, so they built a great company. Best performing stock in the New York Stock on the S&P 500 in the 1990s.
It was
the entire decade.
Victoria Fernandez, thank you so much. Don't be a stranger. Come back to New York often. Really, if the Aggies get into top 5, we've got to have you.
I'll be back. I'll be back.
Pre-March Madness. Victoria Fernandez. It's a rumor she works with Bob Dahl at Crossmark Global Investments. Futures up 15, pretty much unched off the 8:30 economic data. Thank you, IBKR, for that. Getting ready in the quiet of the Bloomberg Launchpad for Fed Day. We'll begin at 1:30. With our news in New York City, here's John Tucker.
All right, Tom, Paul, and Lisa, let's start with the latest development in the murder of United Healthcare CEO Brian Thompson. The suspect, Luigi Mangione, now facing multiple murder charges in New York. Manhattan DA Alvin Bragg laid out the counts.
They include 1 count of murder in the first degree as a killing in furtherance of terrorism, 2 counts of murder in the second degree, 1 charging that the killing was done as an act of terrorism, and the second pertaining to the fact that the killing was intentional.
O'Brien says Mangione could give up his fight against extradition, and that could bring him back to New York to face these new charges by the end of this week. Lawmakers on Capitol Hill have released a stopgap spending measure, but it could be a preview of fights to come. Let's get more in this report this morning from Bloomberg's Gina Cervetti.
The bill would extend current funding into mid-March. It includes more than $100 billion in emergency relief for hurricane victims, the Maui wildfires, and the bridge collapse in Baltimore. But the fight to get those measures attached could point to even more challenges for President-elect Trump's early priorities. Republicans will have just a one-vote majority in the House through at least April, since Trump picked 3 GOP lawmakers to serve in his administration. That'll be right in the middle of a push to pass a new budget along party lines, not to mention bills on border security, taxes, and other budget issues. Gina Cervetti, Bloomberg Radio.
And President-elect Trump has picked football legend Herschel Walker to be the ambassador to the Bahamas. Trump making the announcement in a post on Truth Social. Walker most recently had that unsuccessful run for a Senate seat in Georgia. To hold the ambassador position, he's going to need his nomination approved next year by the Republican-led Senate. Trump also announced he's nominating the art collector Nicole McGraw as the U.S. ambassador to Croatia. And Scott Bessent, Trump's pick to run the Treasury Department, is going to meet with frequent Wall Street critic and Democratic Senator Elizabeth Warren today, part of a series of meetings he's having on Capitol Hill ahead of his confirmation hearings that take place next month. He's on Capitol Hill to meet with a set of Republican and Democratic senators, including Warren, outgoing Majority Leader Mitch McConnell, Texas Senator Ted Cruz, and Oklahoma Senator James Lankford. And here's one for you. In a bid to capture a younger customer than ever, makeup retailer Ulta Beauty is peddling an alluring new collection, makeup toys. For $10 a pop, they're selling plastic mystery balls containing tiny replicas of some of Ulta's most popular products, including, how do I phrase this? Including Gluteus Maximus polish and Wake Up Eye Gel. They don't contain any real cosmetics, but they're convincing fake. Wait, you put a cream down there? Lisa, you want to weigh in on this?
I'm good, thanks.
All right.
It's early and often that we are at Ulta and at Sephora with Afterthought. Thomas Palmer, John Tucker, thank you so much. Thomas Palmer over at Citigroup, out with a note, and this is precisely what we don't talk about. I'm incredibly guilty. Do you know there's another stock market out there besides Apple?
Is there?
Mag 7. Did you know that?
I did not.
Generous Mills out with earnings. Thomas Palmer writes it up at Citigroup. A smart note, 10-year track record. It's up 6% per year. It's got a multiple of something like 14. I love this. Refrigerated dough. We've taken a number of actions recently to reverse the trends on refrigerated dough. Lisa, when is the last time you bought refrigerated dough?
No, I make my dough.
She makes everything from scratch.
Yes,
But folks, it's a promise for next year, which I'll break. We got to talk about the rest of the stock market. Oh yeah, what's Apple doing? They're making a foldable phone. Good morning.
Markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
The Bloomberg Interactive Broker Studio, I'm Lisa Mateo. We've got futures pointing to a higher open on Fed Day. Our special coverage begins at 1:30 p.m. Wall Street time. We've got NASDAQ futures, little change up 11 points. Dow futures up 144 points and S&P futures up 10. The two-year yield, 4.24%. That's little change. And the yield on the 10-year, 4.41%. And that's up 1 basis point. To commodities, Brent crude higher at $73 a barrel. WTI crude $70 a barrel. We have spot gold lower at $2,642 an ounce. The Bloomberg Dollar Spot Index is little change. We have the Japanese yen weaker, euro British pound weaker. We have Bitcoin down 1.5% at just over 104,000. Few companies making news. That's Merck. It acquired the exclusive global license to develop, manufacture, and commercialize obesity drugs from China's Hansoh Pharmaceutical Group, and that's a deal worth as much as $2 billion. And Wal-Mart headed for its best year since 1998. Its shares surged 82%, adding more than $340 billion to Walmart's market value in 2024. And don't you hate it when credit card issuers lower the value of your points or miles that you've already earned or even bought through loyalty programs? Well, now the Consumer Financial Protection Bureau, they're saying those companies could be breaking the law as it's classified as an illegal
fired up on this.
That is your Bloomberg Business Flash.
You know who did that to me? It's Amtrak Acela. I was living on the Acela, and they took my miles away.
Yep. That happened to me too.
Yeah, happened to you. Ira Jersey happened to you.
Yep.
What about miles? I mean, is it so? You're saying to me they finally can't take away our miles?
They're saying they could be breaking the law.
You know what?
Could is the word.
The young kids, like my daughter, she's 28. She and her friends, they are masters of the miles
They're masters,
thing.
yes.
I
Same
never
thing.
was really into it, although I just accumulated a ton of stuff with business travel. But they really work it. These young people, and so
you have to.
Lisa Mateo, thanks so much. We're having a huge equity bias today. Wonderful, wonderful guest. We thought we'd roll over here on a Fed day and talk fixed income. So I get a memo at 3 a.m. Don't talk soccer talk. So we're going to get the soccer talk out of the way right now with Ira Jersey of Bloomberg Intelligence. Let's just keep it simple because it's Fed day. Aston Villa plays Man City.
Yep.
Worldwide, what's happened to Man City?
Man City lost Rodri, and apparently without Rodri, they're nothing. So
Did they just get older?
They've won one game in, I think, the last 12 maybe matches that they played.
I mean,
it's
somebody
terrible.
said Jack Grealish all of a sudden has gotten older. Did Man City, best team in the world, did they just get older? Is it really
that's
that
a big part. That's a big part of it.
Really?
And the mix isn't right. And you know, there's sometimes when you have teams that have been together for so long, they kind of lose some cohesion. Believe it or
Right.
not, you know, even though you think, oh, chemistry's really good, but at the same time, it's like, look,
Right.
they've already won everything, so it's
Yeah.
not exactly like they need to prove anything at this point.
Incoming IB on the Bloomberg. Mike from the Upper East Side says, enough soccer talk. Okay, let's move on. What will you look for in the Powell press conference today?
Yeah, so exactly how less dovish he's going to be. I'm not going to say that Powell's going to be. Yeah, people are calling it a hawkish cut, but it's only hawkish relative to them cutting more, right? So, so exactly how, you know, basically how much of moving away from some of the more recent dovish comments is he going to be? Is he going to signal that January is less than a 50-50 chance of a cut, and that there, you know, he's going to continue to say what he's been saying. It's just the market kind of hasn't believed him, which is we're not on a preset course. We're making decisions meeting by meeting. He'll still say those things, but I think that it will say them enough now that the market will start to believe him. And quite frankly, the market's priced for that already. So there's only really one way to go, and that might be if he's not quite as you know, less dovish than we think, then maybe the market will react a little bit.
Just saw, you know, there was a headline just earlier this morning on the Bloomberg terminal. Traders no longer fully priced 2 B of E rate cuts next year. So it seems like maybe central banks around the world are maybe slowing down a little bit.
Yeah, well, the economies in the developed world in particular have been more robust than anybody. You know, you go back to a year ago and the consensus was we were going to be in a recession now in just about every single developed market country. And we haven't, right? You look at the retail sales data that we got yesterday, and it's certainly not showing we're near a recession right now.
I want you to go over to Anna Wong's world. And folks, I can't tell you this year the number of outside economists citing Anna Wong's and the team's excellence. The 10-year real yield from 2 Fed meetings ago, I looked this morning, Ira Jersey's team had to help me do this, Paul, from like a 151 out to a 208. Does a 10-year real yield above 2 at 208. Does that impinge economic growth? Does that impinge investment?
I don't think as much as it would have in other cycles, right? So one of the big structural changes and shifts that's occurred over the last 15 years, if you go back to the 2000-ish recession, you got corporate balance sheets got much cleaner. In 2007 to 2009, financial balance sheets got much cleaner. After COVID, you wound up having household sector balance sheets got much cleaner, right? So now we're in a situation where any given move in interest rates probably has a much smaller effect on overall economic activity. In fact, one of the charts that I love showing is how much of personal consumption is being done via debt and being done via transfers from the federal government and being done through wage increases. And actually, of those three, debt is by far the lowest. So that means that this economic environment is really being funded by wages and, quite frankly, by government borrowing. So this big deficit that we have for the federal government, a lot of that money is just going right to the household sector. And because of that, this has just been a little bit more sustainable, I think, than most people have thought possible.
So in your market, it's your market that should be worrying about stuff. Your market being the Treasury bond market, about deficits and the debt and things like that. So in your 20, 30-year career doing this interest rate stuff, which, by the way, I can't believe it's a career, but good for you. How has the conversation changed?
Some shade there.
Shade thrown his
Dominique
way.
Constant just fell off his chair at Mizzou over
Exactly.
there. Continue.
How has the conversation kind of changed about debt, the debt and deficits and all that kind of stuff?
Well, it's funny. It hasn't changed that much. We were talking about the debt burden of the United States being too high when I first moved from corporate credit to rates in 2007, right? So that hasn't changed. And of course, the debt has ballooned since then, right? The debt's tripled since that period of time, and even more than tripled. But there is a tipping point, right? There will be some tipping point that nobody knows, that people are going to say, look, there's too much debt outstanding. We can't buy this debt, and because we can't buy this debt, yields are going to go up. The issue that I have with that, some of that, is that what is the alternative investment, right? Where else do you put your money if you want a fixed income investment other than U.S. Treasuries, right? You can go to Germany. Okay, fine. German yields, even after you hedge for FX costs, is actually lower than U.S. Treasuries. So, okay, you can go there and give up 200 basis points. Or you can go to Japan, right, where you can go to Japan, you can buy Japanese government debt, but guess what? Their debt burden's even higher than ours. So if you're worried about our debt sustainability, you really have to be worried about theirs, right? So it's not obvious to me, where you go as an investor. So Treasuries are still like the primary, quote unquote, safest, most liquid asset that there is.
You had the biggest source of conversation in our, we do keep very careful track of the ratings. We're up to 42 listeners. Thank you out there. And you had the biggest source of conversation. And I just looked, June 27th, 2006, Ira Jersey, Red Oak Keeper of the Amex called me. He says, Tom, what do you think of this? Section 113, row 10 rows behind whoever's playing for the finals in the World Cup. $72,000 per ticket.
Wow.
Are you really going to pop $140,000 to see the World Cup?
I'm not. I'm in the pool to try to get tickets from the U.S. Soccer Federation.
We're in the pool.
Well, it's a lottery, so we'll see. There's ways to get a few extra lottery tickets, and I have a couple of them. And one of my business partner in our soccer club, he's actually a higher tier member than me. Because he's a CFO and stuff. So he's
I got 20 seconds. Will we be in New York City tri-state gridlock because of the World Cup?
I would imagine, or hopefully they're running a lot more trains out to MetLife, but you're going to see, hotel. I don't know what's going to happen with hotel rates in the city for that period of time in 2026, but it is super exciting. I mean, we're bringing, football back here to the United States for the first time since 1994.
And that means the U.S. team automatically qualifies, right?
Correct.
Nice.
Yep. Along with Mexico and Canada, because there's three host countries this time.
Good point. Good point on that. I forgot about that. Okay, that'll be fun.
$144,000 for. I don't think Red Oak Keeper the MX. I couldn't get that by him.
No. We'll see. Put it through. We'll see what happens.
Ira Jersey, thank you. Important conversation there on Fed Day, and it is Fed Day. We'll see you at 1:30. What do? We miss Tina Turner. That's what we do. Good morning.
You keep your mind on the money, keeping your eyes on the wall.
This is Bloomberg Surveillance with Tom Keene and Paul Sweeney.
I'm sorry, it's a boom economy, and that's what we're adjusting to.
Neither party seems to want to take on deficits at all.
With Lisa Mateo on markets.
Stocks are coming off another record high.
And Michael Barr with news.
Tensions between the U.S. and China have heated up even more.
The best in economics, finance, investment, and international relations. This is Bloomberg Surveillance on Bloomberg Radio.
Good morning, everyone. Tom Keene, Paul Sweeney, Michael Barr, Lisa Mateo. Markets pull back. We're up 15, up 17 on futures. Now up only 3 points. The VIX gets out near a 16 level, 15.84. Some of the quiet tension that we have into a Fed meeting today. Let me tell you about that. 1:30 this afternoon. Myself, Jonathan Farrell, Lisa Bramowitz. We'll do the Fed show. Bob Michael, I believe, is scheduled to darken the door at J.P. Morgan. We'll go on to some good, I'm sure Romaine Bostick will have some good analysis, and Carol Masser and Tim Stevanovic as well. And also at 4:30, Bloomberg Economics, the Anna Wong team, they will do a Q&A. You could call in to talk to them.
Really?
A Bloomberg Live Q&A with the Bloomberg Economics team. Look for that.
Good.
At 4:30 this afternoon. What do you see out there, Paul? What are we doing here?
I see, we're getting half an hour. Lisa's going to get this market open for us in about a half an hour, but just kind of mixed out there, Tom. I think, as we typically see on these Fed days, a little bit of waiting on the sidelines here. But we got the 10-year Treasury yield sitting right at 4.40%. We'll see how that trades this afternoon.
I would suggest, and this is off the radar, the DXY just printed 107. Idiosyncratic, David Gurr's interview tomorrow with Secretary Blinken. Turkish lira just went through 35, weaker lira. I don't think that's correlated into Jerome Powell, but other things are. EM is a little soggy.
Yep.
It's worth watching really across the board. EM, it's not going to be on the radar today. There's not going to be a question about it, but I think it shows some of the complexities away from the simple view. Let's get right to it in our wonderful coverage of this great bull market. Gina Martin Adams will be with us here in a moment. Futures up 5 from the Interactive Broker Studios. Our Bloomberg Business Flash, El Mateo.
Yeah, we've got a little bit of a pullback from earlier. Traders kind of bracing for the Fed's widely anticipated rate decision. Also, its forecast for next year. So now NASDAQ futures down 14 points. We have Dow futures still up 0.2%, 107 points. S&P futures up about 5. We head to the 2-year yield, 4.23%. That's down 1 basis point. The yield on the 10-year, 4.41%, and that is little changed. To currencies, the Bloomberg Dollar Spot Index is little changed. We have the Japanese yen down 0.2% at 153.77 against the dollar. The euro little changed. The British pound down about 0.1%. We have Bitcoin down more than 1.5% at just over 104,000. Shares of Nissan jumped the most on record, close up 23% in Japan, and explores that merger with Honda. Sources tell Bloomberg that deal could be expanded to include Mitsubishi, and that also Foxconn approached Nissan about taking a stake. Now, Honda closed down about 3% in Japan. And another stock on the move, ChargePoint, up 10%. The company and General Motors, they plan to install hundreds of ultra-fast electric vehicle charging ports nationwide. That is your Bloomberg Business Flash. Paul and Tom.
Lisa Mateo, thanks so much. A glorious day of consideration of what to do in equities. And the center tendency of each and every guest is figuring out earnings and cash flow growth. Gina Martin Adams, driving Bloomberg Intelligence Equity, has been out front with figuring out the double-digitness of earnings growth. Gina Martin Adams, will we fade away from a 14% growth assumption?
Look, I think it's very likely that the bottom-up consensus is pretty close to spot on for earnings growth into 2025. The problem that the market faces is not that analysts are too optimistic, it's that the market itself is now too optimistic. This is very different than the condition that we've been in for the last 2 years. The market itself was expecting nothing out of earnings, very little out of earnings. Analysts slowly started to mark up their forecasts, reflecting better earnings growth. Today, we're sitting at a point where the bottom-up consensus is expecting somewhere between 12 and 15% earnings growth over the next 12 months. That doesn't seem terribly unlikely. That's actually very possible, particularly in an environment where ex-tech industries are just getting going in terms of earnings recovery. What's not likely is what the market is pricing, and our models would suggest the market is pricing greater than 23% earnings growth to emerge next year. Potentially more than 40% tech sector earnings growth is already priced in. Those are tough bogeys to reach. So I think you've got a more of a mixed view on earnings for 2025 than you've had in quite some time. It was an easy win over the last couple of years. It's going to get a little harder next year.
SPX versus SPW, kind of the breadth between those two indexes, the equal weighted is really starting to underperform SPX. Concern to you?
That is a concern because this is where we need to get our earnings momentum next year. So the market is right and it's saying, hey, maybe we're not going to get that earnings recovery out of financials, industrials, consumer stocks. Maybe we're not going to finally get some healthcare positive prints in 2025. And that's the reason why the SPW is underperforming. Then we're in trouble. I do think, though, a lot of the reason is because investors are still very concentrating their bets in the mega caps. That's a risk in and of itself. Again, when you're sitting here and the market is pricing for, we think, close to 40% tech sector growth, broad S&P 500 growth of 25%, the bets are concentrated. The concentrated bet is the game that has been afoot for the last 2 years, which is tech companies keep coming in and beating expectations. They keep guiding us to expect more. AI is a phenomenon that's going to last. That game is expected to continue in 2025. We're expected to see more of the same. That's the real risk, is maybe it won't be more of the same. Maybe we'll see something different. Maybe the tech companies will wobble a little bit or even just consolidate while the rest of the market plays catch up. But the market is not particularly prepared for that kind of environment.
What are you looking for today from our Federal Reserve Chairman?
Yeah, I want to know what's going to happen in 2025. Frankly, I think that an ease is another shoo-in this week. It seems pretty obvious that the Fed is going to stay the course. But I'd like to know what they're looking for in 2025 to keep the easing underway. Obviously, easier rates have been a huge part of the equity market's gains over the last couple of months. And matter of fact, the equity market has gained at an enormous pace relative to past easing cycles. So we're pricing in for those continued eases to come next year, at least 75 basis points more easing in 2025. Will they justify what we've already priced? Or will we have to start to question that is a key question for me.
In the latest move, I'm going to call it Gina Martin Adams, the Trump move, Indonesian currency, the rupiah. Indonesian currency, 6% weaker. Philippine peso, 6% weaker. Damien Sassauer says blended 6% weaker. As an example, Apple, I'm going to say over 50% of sales are international.
Yeah.
Is strong dollar get in the way of the assumption of U.S. earnings?
Yeah, this is a critical question for us. It's something we started writing about a couple of weeks ago. Historically, when the dollar rips more than 10% or more, you tend to see some earnings wobbles emerge in multinationals. We are right on the precipice of that level now. It takes a 25% jump to really create earnings disruption. 10% is enough to create wobbles. And it does also perpetuate the problem that we were just talking about. The multinationals, the biggest stocks, the tech stocks are those that are most subject to dollar risk. And those are where we're concentrating our bets. Those are where we've got the greatest expectations for growth. So the dollar could very well, I think you're spot on with this, get in the way of earnings trends in 2025 as well.
So if we get a 25% move, I'll buy you a beverage at the Plaza Hotel. Gina, if we get to 10, I'm suggesting this is wildly nonlinear and almost as a jump condition. Are we close to the jump condition of dollar angst in terms of earnings on the balance sheets, on the income statement?
Yeah. Only for that subset of companies that's incredibly multinational. That's the difference between 10 and 25. 10 is problematic for a small segment of the S&P 500. It creates volatility in the earnings outlook, creates some margin shifts, definitely creates some commentary changes for the most multinational of the multinationals. 25 is problematic for the whole index, because it's a bigger currency disruption, tends to be affiliated with major changes in commodity prices, for example. So 10 is problematic for some, not all. 25 is problematic for everybody.
Gina Martin Adams, thank you so much. Greatly appreciate it. Driving equity at Bloomberg Intelligence. Really, her and her team, she's got like 485 people.
Yeah, they're all over the place.
She has to do like 3 conference calls just to, tell them to come in 5 days a week. Gina Martin Adams, thank you so much. Still looking for double-digit earnings as well. Red and green on the screen. Futures actually come back here now. I'm going to say a little more the market, I'm confused, Paul. Help me. It's Fed Day.
Yeah, it's Fed
We're
Day.
still in futures. Futures have come down. Up 17, we're now flat. As was that discussion. I'm sorry, folks. Brain freeze. Never having a brain freeze in his 22 years here with our Bloomberg News Flash, John Tucker.
Yeah, an unbroken streak. Let's start with this one. The suspect in the shooting death of United Healthcare CEO Brian Thompson now facing multiple murder charges in New York. Manhattan District Attorney Alvin Bragg says prosecutors have elevated the case against Luigi Mangione to first-degree murder, and that's a charge usually reserved for the most abhorrent conduct.
This was a frightening, well-planned, targeted murder that was intended to cause shock and attention and intimidation.
Well, the Manhattan DA says Mangione is also charged with 2 counts of second-degree murder, and one of those as an act of terrorism. Mangione has 2 hearings scheduled tomorrow in Blair County, Pennsylvania, where he's fighting extradition to New York. If he does give up on that, he could be back here by Friday. Defense Department spokesman says none of the mysterious drones reported over the skies of the Northeast are being flown by the Pentagon or part of any secret government test. And President Joe Biden last night also weighed in, saying there's nothing nefarious, apparently.
There's a lot of drones authorized up there. I think one started and they all got it. Everybody wanted to get in the deal. But we're following it closely.
And at the Pentagon, Major General Pat Ryder telling reporters top department officials take seriously any cases of drones flying near or over military sites, though he adds this is not a new concern. More than 1 million drones are registered to fly in the U.S., with about 8,500 in flight on any given day. The Israeli military today ordered another evacuation in central Gaza. This comes ahead of an offensive in the area, even as Israel and the militant group Hamas appear to inch closer to a ceasefire in their 14-month war. And the top of the art auction market plummeted this year, with only 3 works surpassing $50 million, compared with at least 6 in 2023. Only 1 work by a living artist made the top 10. It was dominated by the old standbys, including Van Gogh, Monet, and Andy Warhol. Global News, 24 hours a day, whenever you want it.
Banana and duct tape.
Bloomberg News. Actually, go by Andy Warhol's old residence on 66th Street every day on the east side.
Very cool.
Beautiful
As
town.
you're practicing saving from the congestion tax.
As I sit here in traffic. But it's got this beautiful plaque outside.
We have 2 reporters in Washington, Stephen T. Dennis and the really great Billy House.
Yep.
Moments ago, a tweet, "This bill should not pass." This is the cabinet officer, Elon Musk, posting on X. Can you imagine being Speaker of the House and you have someone disrupting incredibly difficult phone calls and breakfasts, and you've got 15 people out getting the lay of the land to get this bill through Friday, and all of a sudden, Elon Musk, this bill should not pass. This is new.
I'll recall when Steve Bannon became, he was on the cover of Time magazine. It was about 2 weeks later that he disappeared from the Trump administration.
Oh, listen to
how
you.
How much attention is Elon Musk getting and taking away from Donald Trump?
Trump key advisor Musk comes out against year-end funding bill. It's a whole new world after all. That's all I know, folks. What we know is we need to get the market open. We'll do that in 15 minutes. Red and green on the screen on this Fed Day. It's Bloomberg Surveillance.
Markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And this Bloomberg Futures Report sponsored by IBKR. Markets never sleep, and neither does Interactive Brokers. Discover opportunities with CME Group Futures across equity indices, interest rates, FX, energy, and more. Access CME Futures around the clock at Interactive Brokers. All right, we've got futures now mixed. Investors waiting the Fed's final policy decision of the year. Central Bank expected to lower rates by 25 basis points with a focus on Chair Jay Powell's thoughts for January. This morning, we had some more insight into the housing market. Housing starts fell 1.8% to an annualized rate of 1.29 million in November. That's a 4-month low. Building permits, those rose. We have NASDAQ futures falling down 0.1%, 32 points. Dow futures up 0.1%, 82 points. And S&P futures are little changed. The 2-year yield, 4.22%. That's down 2 basis points. The yield on the 10-year, 4.39%, and that is little changed. To earnings we go. Lucky Charms maker General Mills, their shares down 4% now. The company scaled back its profit expectations, even though its most recent quarter beat forecasts. And after the close, we're on to home builder Lennar and Micron Technology. Other stocks on the move, packaged food company Post up 2%. The company said it agreed to acquire Potato Products of Ohio. And finally, shares of Birkenstock on the rise, up 7%. It's thanks to a boom in its closed-toe sneakers, boots, clogs, and slippers that are just a bit more expensive than those classic sandals. For on-demand news 24 hours a day, subscribe to Bloomberg News now wherever you get your podcasts. I'm Lisa Mateo. That's your Bloomberg Business Flash.
I'm afraid to ask you, are there like lots of Birkenstocks at the Mateo household?
No, they're more the Crocs, but I see a lot of the
Crocs,
closed-toe Birkenstocks all over
Really?
because it's colder out. So
All right,
you
I'll
got to
start
keep the toes cold. So
Somebody
they're all
said to
over.
me the other day, do you wear Birkenstocks? And I said, I'll wear Birkenstocks when Jason Trennert wears Birkenstocks.
Yeah, exactly. Not happening.
That's where we are, right? It's not happening. Joining us right now, it has been way, way too long in a different conversation. Jason Trennert is Chief Investment Strategist at Strategas. He's just been wonderful over the years of a belief in America, a belief in our capitalism, and you participate in the equity markets. Jason, for a part of this discussion, this conversation, I have to change the dialogue, and I'm going to blame it on one C. Gasparino over at the New York Post. Okay. Jason, are you under consideration or are you in discussions with the Trump administration, with Mr. Lutnick, about serving the future president of the United States?
Well, I've been down to Palm Beach and I've talked to the transition on a number of occasions. And to be honest with you, that's about all I know. But I'm very much willing to serve, given the right opportunity. And certainly I'm very supportive of the new administration. And so it would be an honor, if asked. But nothing has been asked yet. So we'll see how that goes. And for the record, by the way, you'll never see me wear Birkenstocks.
Yeah, we knew that.
I'm more of a wingtip guy, but anyway.
I was on safe ground there. Mr. Gasparino goes on to say you would be, quote, a leveling force. What is the leveling force, Jason Trennert, that President Trump needs to hear from the Treasury Secretary and from a potential Trennert at 1600 Pennsylvania Avenue?
Yeah, and I'm sure if I were offered something, I wouldn't exactly be a heartbeat away, by the way. And I'm not sure President Trump needs any leveling force, because I'm very much in agreement with many, if not all of his policies, particularly with regard to trade. And I also think certainly in terms of rationalizing the size of federal government. So in my opinion, I don't think any leveling force is needed, but I would be a strong defender of the policies that he's talked about.
All I know, Paul, is if Jason DeSena Trennert joins the Trump administration, you're going to hear President Trump talking about Italy is the 52nd state. Continue.
Exactly. So, Jason, what would you advise the president as to economic policies in terms of a kind of a to-do list, or maybe a step 1, step 2, step 3 type of recommendations?
Well, listen, I think, again, and I don't want to be overly, I don't want to be presumptuous. The president has a great economics team there right now. But in my opinion, I do think President Trump was elected for two reasons, largely. One is I think that there's a sense that the immigration policies of this country have gotten out of control and have hurt just average Americans, and I think he's right about that. And I also think that inflation was another big issue. And as you know, we've created something called the Common Man CPI, which looks at things, it's the opposite of supercore, which excludes food, energy, and housing, which, in my opinion, is all those things are pretty core. So we go the other way, and we just focus on things people have to buy. And I do think that certainly deficit reduction would be a good way to start to try to rationalize prices. It's hard to run deficits 6 to 7% of GDP continually and then expect to make real progress on inflation, in my opinion. So I think he's got those things right for whatever that's worth for him. And that's, in my opinion, that's very, very likely to be where he starts. And that's why he was elected.
Paul, this is important. What Mr. Trennert's doing with inflation, like the real inflation, harkens to Lawrence Kudlow. And this is something Larry Kudlow's really, really been right about, is this insistence to core. It's not the real world after all.
Yeah. So, Jason, to the extent that this incoming administration would like to reduce deficits from 6% of GDP to 3%, how do you do that? What's the way forward, do you think?
Well, listen, it's not, and I don't think, to be very realistic about it, I would greatly suggest that we don't try to throw the thing in reverse. President Trump didn't create deficits of 6 to 7% of GDP. I don't think he should be expected to reduce them to 3% in a year or 2 years, but he does have 4 years. And I do think DOGE is in my opinion, it's a very, very powerful concept. And now you're dealing with 20% of the budget that isn't, that is discretionary. But I do think that sets a tone for everything else. And I do think there's a certain sense in which you worry about the pennies and the pounds take care of themselves. But the best way, obviously, so not only is it reducing wasteful government spending, but it's also a big focus on growth, right? It is encouraging capital formation, encouraging capital investments so that you can grow your way, you can grow the numerator, so that the deficits are not, not necessarily the denominator rather, so the deficits are not really as big a deal. And to me, that's where I would focus more than anything, is economic growth, and then also, just stop doing dumb things.
Jason, quickly here.
Which is not always easy.
Jason, quickly here on the Mag 7, are you still long our tech vision?
Listen, I think it's really difficult. The market's not cheap, but it's really difficult to fade these companies because they have the cash flow with which to continue to invest in artificial intelligence. And I would say your average CEO of a company in the United States is more at risk of being fired by not spending enough on these new technologies than spending too much, at least now. And I think, and most of the companies have this ability they have the cash flows to do that. So there's not a big risk to it. At a certain point, there's going to have to be some sort of proof of concept that these investments are actually resulting in productivity. But I think you have some time before those expectations get too high.
Jason Trennert with us. So we're going to continue with Jason Trennert here, really dive into the stock market and the view that he believes for, can I say it, Dow 45,000, Dow 46,000. I would just point out that Jason, on his way to Washington, 1132 19th Street Northwest, the best humidors on the East Coast.
Oh, yeah?
Unbelievable.
Solid.
Casa de Monte Cristo Cigar. They have the greatest humidors I've ever seen. They're squishy small. There's not a lot of air in them.
No?
So they're really great.
Okay.
It's a stone's throw from 1600 Pennsylvania Avenue. Jason Trennert will continue with us here on the equity markets. So red and green on the screen. The VIX 15.69 yield. Same thing, red and green on the screen there. The 2-year yield is a bit quiescent, 2.07%. The Fed meeting today, we begin at 1:30 through the show, through the press conference, after the press conference. Anna Wong and Bloomberg Economics on Bloomberg Live. A Q&A, that at 4:30. worldwide. This is Bloomberg Surveillance with Jason Trennert.
Markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From the Bloomberg Interactive Broker Studio, I'm Lisa Mateo alongside Tom Keene and Paul Sweeney with your opening bell report. The traders really been in this wait-and-see approach as we get closer to the decision from the Fed on interest rates. Economists do say policymakers expected to make another cut, but what investors really want to know is what are the plans for next year? So yes, Jay Powell's words will be key later this afternoon. Let's see the sentiment on Wall Street as we get these markets open, starting with the S&P 500 down just a fraction, about 2 points. We have the Dow, little changed, up about 12 points, and the NASDAQ, well, that's down, that is little changed, up about 7 points. So still this wait-and-see approach. We'll get to the two-year yield, 4.22%. That's down 2 basis points, and the yield on the 10-year, 4.39%, and that is little changed. We have Brent crude, $73 a barrel. That's up about 0.4%. WTI crude, $70 a barrel. We have spot gold lower, $2,654 an ounce. The Bloomberg dollar spot index is little change. We have the Japanese yen down 0.2%, 153.86 against the dollar. Euro, British pound weaker. We have Bitcoin down more than 0.5% at just over 104,000. That is your Bloomberg opening bell report. Paul and Tom.
Lisa, thanks so much. We are with Jason Trennert, who for years with Ed Hyman set up his own shop, hugely successful Strategas Partners. We talked earlier about any potential Washington work for Mr. Trennert. Now we focus on the markets. Jason Trennert, one of my heroes, William Priest, was in the studio yesterday. Yeah. Definitive book on free cash flow and shareholder yield. What is the quality of the Mag 7 free cash flow?
Well, it is quite good. One of the things, though, that is changing that I think people have to kind of keep in mind is that these are no longer really capital light industries because of their investments in AI, right? So if you look at, let's say, capital expenditures as a percentage of sales, the Mag 7 is actually more capital intensive than, let's say, the energy sector, right? So that is a difference. And so the good news is these companies are throwing off tons of cash. That means that they can make their own luck as far as stock prices are concerned, generally speaking. They can buy back stock or increase dividends or what have you. But a lot of the cash flow now is being directed towards capital investments. And so that means that sooner or later those capital investments are going to have to bear fruit, or they're going to have to retrench, and there'll be a repricing of those stocks. So the good news is they have the money. The bad news is, eventually the clock will be ticking to see whether those were good investments or bad investments.
Jason, can you talk to us just broadly about these markets as we head into 2025? It feels like sentiment levels are really stretched here. I mean, valuations are one thing. Maybe, the market can earn its way into the valuation, but boy, sentiment seems pretty stretched here. Is that a concern for you?
It is. It's definitely a concern. I mean, and I think financial conditions, in my opinion, it's ironic because financial conditions, if you're rich, are quite easy. Financial conditions, if you're not rich, are quite tight. And this is one of the issues, right? So you have some guy buying a banana taped to a wall for $6.5 million, and then there's other folks that can't get a mortgage, right? So, but in my opinion, sentiment is getting kind of frothy out there. There is a lot of excitement about things like Doge. There's a lot of excitement about deregulation. All of those, I think, are worthwhile. the thing we're watching very closely to determine when to get more concerned about equities really is the 10-year Treasury yield. We've seen since this bull market started in October of 2022, there have been 3 major corrections since then in the bull market. 2 of them were associated with 10-year Treasury yields above 4.5. The third was associated with an end to the yen carry trade in August. So in our opinion, 4.5 to 5% is a little bit of the red line for risk on. And if yields rise to 4.5 to 5, we're going to start to lighten up a little bit. Not necessarily get bearish, but maybe get a little bit more defensive and raise a little bit more cash.
Jason, what do you need to hear from your Federal Reserve Chairman this afternoon?
Well, listen, I would like to hear that they are very aware that there is not an insignificant chance of another wave of inflation. I know that kind of ruins the party a bit, but I also believe that to be true. And 10-year Treasury yields are up 70 basis points since the Fed first eased. Mortgage rates are up since the Fed first eased. And there is a fair amount of historical precedent. Don Ritzmiller, our chief economist, did some great work on waves of inflation. And what he found was that once you have one wave of inflation over 6%, the chances of getting another wave are about 9 and 10. And he looked at about 24 countries over 100 years.
Right.
Part of that is because wages, there are pent-up demand for wages. And you're seeing that with let's say, Boeing machinists getting 38% over 4 years, longshoremen getting 62% over 6 years. Part of that is to make up for the fact that their standard of living declined when inflation rose the first time. So once the toothpaste is out of the tube on inflation, it's kind of hard. It's harder to get it back in than you think.
If we have an inflation, old Georgetown microeconomics, there's an ambiguity, Jason Trennert, and that will sustain nominal GDP. So which way does it cut if we have sustained or even a bit higher inflation? Does that help General Mills, Colgate-Palmolive, and NVIDIA?
Well, it helps profits, right? So because profits are nominal, revenues are nominal. It tends to hurt multiples, though, right? At least before QE, higher inflation would lead to higher long-term interest rates, which would lead to lower multiples. That relationship has weakened meaningfully since we started using the balance sheet like some sort of plaything. And with a $7 trillion balance sheet, that relationship is a little bit weaker. Having said that, higher long-term interest rates tend to hurt the multiple. So, Tom, you're right. It helps profits, and equities are not a bad hedge against higher inflation. They're a better hedge than fixed income, but it's not like it's free, right? It comes with a cost, and that's the willingness of people to pay up for those earnings.
Jason, some folks are suggesting that as we think about some of the potentially inflationary pressures from President-elect Donald Trump's economic policies that we know of to date, that deportations might be more inflationary than, say, tariffs. A, do you believe that? And B, how would you advise, I guess, the president on that?
Yeah, no, I actually think that's right. We've spent a lot of time on some of these issues. I have to say, remember, President Trump raised tariffs in his first term. When you look at the data carefully, what you find is really the tariffs went up meaningfully, really only against one country, and that was China. There were other countries like South Korea and Taiwan where President Trump actually cut tariffs during his administration. And I would say this time around, China still is in the crosshairs. I agree with your assessment, though, about let's say, mass deportations. And Peterson Institute came out with a study. It doesn't mean it's correct, but they found that the relationship between inflation and mass deportations is higher than it would be for what's being forecasted for tariffs. And so, which is to say, let's say let's just pick a number just at random. We deport 1 million people here that have had some run-in with the law or here illegally.
Right.
I don't think that would have a big impact on inflation. If you start deporting 8, 9, 10 million people, that's going to have an impact on the labor markets, right? And then we have to make a decision as a country whether that cost is worth it. But I am very sympathetic to this idea that that's maybe part of the economic plan. It's not part of the economic plan, but it's part of the policy mix that is, for inflation at least, is something we have to keep an eye on.
Jason, got to leave it there. Jason Trennert, thank you so much. With Strategas, a lengthy conversation this morning on his American stock market and economic experiment. Right to it with Red and Green on the screen on this Fed Day with our news in New York City. John Tucker.
All right, guys. Key Trump advisor Elon Musk has come out against the Republicans' latest deal to temporarily fund the government. He joins a growing chorus of conservatives slamming Speaker Mike Johnson's plan, Musk posting, "This bill should not pass." The House and Senate have agreed to extend government funding into March. Johnson's struggle for a deal to keep the U.S. government open after Friday is an ominous sign for his shrinking and fractious Republican majority's ability to push through President-elect Trump's early priorities. The Defense Department says none of the mysterious drones reported over the skies of the U.S. Northeast are being flown by the Pentagon. Even President Joe Biden last night said, "We're following this closely, and so far, no sense of danger."
Nothing nefarious, apparently.
At the Pentagon, Major General Pat Ryder telling reporters top department officials take seriously any cases of drones flying near or over military sites, though he adds this is not a new concern. He also said the government isn't conducting any sort of secret tests. Criminal charges have been filed in New York against Luigi Mangione, the man accused of killing United Healthcare CEO Brian Thompson. He's now charged with first-degree murder as an act of terrorism. Prosecutors say the charge reflects a belief that Mangione killed Thompson to evoke terror. New York City Police Commissioner Jessica Tisch has said she had a message for those who celebrated the crime.
There is no heroism in what Mangione did. This was a senseless act of violence. It was a cold and calculated crime that stole a life and put New Yorkers at risk.
Mangione could give up his fight against extradition. That could bring him to New York to face these new charges by the end of this week. Boeing says it's resumed production across its range of aircraft programs at factories in the Pacific Northwest. They were shut down for weeks because of a lengthy workers' strike. Russian authorities detained an Uzbekistan national on suspicion of killing a top general in a Moscow bomb attack. They said he'd been recruited by Ukrainian security services to carry out the assassination. The general was the most senior Russian commander to be assassinated deep inside Russia since the Kremlin began its invasion of Ukraine. And the motive for a shooting that killed a teacher and a student and wounded 5 others at a Wisconsin school, that continues. Madison Police Chief Sean Barnes says they're looking at everything.
Identifying a motive is our top priority. But at this time, it appears that the motive was a combination of factors.
He appealed to the public to share what they know about the 15-year-old girl who attacked a study hall before shooting herself. And more delays for the SpaceX crew, still stuck on the International Space Station months after their mission was set to end. Astronauts Suni Williams and Butch Wilmore traveled to the space station back in June on board Boeing's Starliner spacecraft. They were scheduled to return home the following week, but the Starliner developed problems. A new SpaceX rocket was set to launch this coming February to finally bring them home, but now NASA is pushing back that mission until at least late March. They're citing the need for more preparation time. And a Virginia man has died after a bear in a tree shot by one of his hunting partners fell on him. A hunting group was following the bear when it ran up the tree. The group retreated from the tree. The hunter then shot the bear. The animal fell onto the other hunter, who was standing about 10 feet from the bottom of the tree. Apparently, this has happened before. In 2018, a man in Alaska was critically injured after his hunting partner shot a bear on a ridge. The animal tumbled down the slope onto the man, who was also struck by rocks, dislodged by the bear.
Where do you find these stories, dude?
These are all bear stories. Another man was injured in 2019 after his hunting partner shot a bear in a tree.
Oh, you're going to keep going here.
He's trying to show
I
this
can't
is
bear
not
it.
a random thing.
It's not random.
It happens.
John Tucker, thank
When
you.
you're out bear hunting, just be careful.
Be careful.
is
John
the
Tucker,
motto.
thank you
That's
so
all I'm
much.
saying.
Kevin Gordon over at Schwab rechannels Anna Wong and Bloomberg Economics. It is a spectacular scattered out chart of what Chrystia Freeland, ex-Canadian government, is focused on. You ready? 84% of our airbags come from Canada and Mexico. 83% of our seatbelts come from Canada and Mexico. 69% of electric conductors come from Mexico, and 105% of bears falling out of a tree come from Mexico and Canada.
And don't tax Modelo beer and Corona and stuff like that. I mean, come on, don't put a tariff on that.
The granularity of this, Anna Wong killing it with Bloomberg Economics. It's Fed Day, Bloomberg's surveillance.
Markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From the Bloomberg Interactive Broker Studio, I'm Lisa Mateo. Stocks, well, just struggling for some direction. Investors waiting for the Federal Reserve's final policy decision of 2024. Now, a quarter-point Fed interest rate cut almost fully priced in. Traders going to focus on that outlook for 2025. We get to the NASDAQ. Little change, down about 18 points. The Dow up about 67 points, and the S&P 500 down about 5. We have the two-year yield at 4.21%. That's down 3 basis points. The yield on the 10-year, 4.39%, and that's down 1 basis point. The Bloomberg Dollar Spot Index is little changed. We have the Japanese yen down 0.2%. The euro stronger, British pound weaker. We have Bitcoin down about 1.5%, just over 104,000. To earnings we go. Cereal maker General Mills, their shares down about 3%. The company lowered its profit outlook for fiscal 2025. That's in order to invest in price reductions to drive sales. After the close, we move on to home builder Lennar. Their shares are a little changed right now. And also Micron Technology, their shares up about 2%. And finally, Expedia. That's up about 1.5% after an upgrade from Bank of America to buy from neutral. That is your Bloomberg Business Flash. Paul and Tom.
Lisa, thanks. We're open for trading. It's a churn, just like Lisa said. It's got pre-Fed day, 1:30. We'll dive into it with conversation. Get through the press conference. A special moment at 4:30 today. Anna Wong, Bloomberg Economics. Out on the terminal, Bloomberg Live, Q&A on the immediacy of the step forwards for the Fed. Right now, Breach Karana joins us with Wellington in Boston. And I want to cut right to it. We had Alan Blinder on the other day. Did you have Blinder or Baumol on Economics 101 at Princeton?
I had Blinder, actually, yeah.
You survived Alan Blinder.
I
What
did.
is it like having Alan Blinder? Is it mathy? Or does he want to know what you think of William McChesney Martin?
It was pretty mathy, actually.
Yeah.
No, he's
underplayed.
He's
on
intense,
that.
yeah.
It's really intense, and it's like all of a sudden the calculus clicks in. Oh, this is why I took it. What does Blinder Baumol say about the ambiguity we're in right now? If rates come up, that's a signal nominal GDP is okay, which means we get better earnings, better market, but it also creates stresses. Which way does the ambiguity fall in 2025?
I mean, so it could be, certainly I think the rise in bond yields 70 basis points since the Fed cut in September is certainly part of better economic data we've gotten in the last few weeks. But I also think that the market has priced in a fair amount of term premia, just pricing in much more Treasury supply. So one way I look at it is, if you look at forward Treasury yields, so right now 10-year Treasury yields are about 4.40, but in 10 years' time they're about 5.20, or at least that's what the market's pricing in. You compare that to what the Fed funds, the market's pricing for the Fed in a few years at about 375, and you're talking in about 150 basis point spread, which is actually, in my view, a decent amount of term premium. So it's not, I don't think it's only nominal GDP increasing. I think it's also, much more cognizance of the supply implications from the Treasury.
2025, you're thinking about where to go here with your team. Where do you see opportunities? Where do you see value?
Yeah, so I think there's a lot of different parts of the bond market that we do find attractive. I think when we're talking about Treasury inflation protected securities, so TIPS and other inflation linked bonds, I think when we think about the policies of the new administration, you can broadly talk about immigration reform, tariffs, and the third being more fiscal spending or tax cuts. We're not sure exactly how that'll play out. But I do think in the first two cases, you're talking about a more negative growth inflation trade-off than we've seen in the last few years. Certainly on the immigration side, that curbs the labor supply curve. And then tariffs, it's unclear the effect on inflation because you get this one-off price shock, but then there is a hit to consumer spending. And so those two policies likely, as I say, represent more of a negative growth inflation trade-off, and that's an environment where real yields are close to 2%, so that's 2%, yep. And then you get the inflation compensation, which we think is attractive, and particularly with the market basically giving the Fed credit for keeping inflation basically at 2% forever as priced into the bond market.
What do you think your Federal Reserve Chairman is going to do today, this afternoon?
Yeah, I think they are going to cut 25 basis points. There's 95% probability of that happening according to the market, and we live in a world where if it's priced in, the Fed does it primarily. I do think the key to this press conference, and will be the dot plot in the press conference, and the dots, I think, right now the market has, after today's cut, has basically two more cuts priced into next year. In the last time they put out their dot plot, the Fed had about 4 cuts more priced in for 2025. And so I think if they go to 2, just in line with the market pricing for next year, I think that will be considered pretty hawkish. If they go to 3 cuts, that's probably what's expected in some degree. And I think you're going to see, Chair Powell really, relative to the last few press conferences, just be a little bit more, questioning whether or not inflation will really get back, or they have the same confidence that inflation will get to the 2% level.
My chart of the year, which I got to put out again, folks, on LinkedIn and Twitter, I'll figure out how to do that. Lisa has to help me with that. Is the Barclays Lehman, the Bloomberg Total Return Index, with a 6 standard deviation crater in price. And the untold story this year is how we've actually made back a lot of that price erosion. We're now negative 3 standard deviations off the great moderation trend. Do you manage at Wellington knowing someday we're going to migrate back to that log vector of what the great moderation was in price?
I'm probably more optimistic on fixed income than a lot of people. And I do think that, we're talking about a labor market in the U.S., which looks kind of like it was pre-pandemic, in terms of the quits rate, leading indicators on wages, the unemployment rate, et cetera. And you're talking about inflation that there's no doubt is, anywhere from 1 to 1.5% higher. But I think if we compare the U.S. economy, productivity has been roughly the same. Labor supply is probably growing less than we've seen in the last few years. And I think it's helpful to remember in 2019, the Federal Reserve cut 75 basis points to 1.75%. And so I do think that, even with a stickier inflation outlook, policy rates are restrictive and, rates have room to move.
You have a total return opportunity.
I believe so, yes.
The boring, Bruce, when he was at PIMCO, he had to go clip coupons in the mailroom like Bill Gross.
Sure.
Your first 6 weeks at PIMCO, you just sit down in the basement with a pair of scissors in your hand.
Exactly. How much credit risk should we be taking in this market?
You know, I don't find credit spreads terribly attractive, although every time I come on your show, they seem to move tighter and tighter. So,
Yeah, we
so
noticed.
who knows? So maybe that's good for the stock market every time I come on. You know, I do think that IG spreads, 70 basis points, high yield spreads, 270 basis points, really not compensating, at least in the high yield side, for recoveries on defaults and any kind of distressed exchanges. And I just think there's better opportunities out there for generating income in bond markets right now. And so, you know, agency mortgages, we think they're attractive. These are bonds issued by Fannie Mae and Freddie Mac. They're trading at about 135 basis point spread to Treasury bonds. And, you know, historically, that's kind of the median spread level. But I do think that as the Fed continues to cut, even if it's not all the way to, you know, 3% like we thought a few months ago, you know, I do think as they continue to cut, that's going to be very attractive for banks to buy.
You darken the door at Harvard and Princeton. I mean, Paul, this is the only, we don't care about the bond market.
No, we do not.
Paul, discuss.
According to ESPN, and they're citing sources, Ivy League to participate in football championship series playoffs going forward. That is huge for Ivy League football. And we talked to the Harvard coach.
Can you see the Wellington blimp over the football stadium
now
when
they're
they
gonna have
do
to
that?
get playoff tickets to see Princeton and Harvard play.
Ivy League is going to play postseason football?
I think it's great.
What do the econ majors do?
Exactly.
In November or December.
I got exams, guys. I can't play. That's what they're going to say.
Really?
Yeah,
oh,
exactly.
Welcome to Alabama, right?
No, they're saying. I think they have to do this just from a competitive standpoint. If you want to recruit kids, they got to let them play in the playoffs.
Pete Thamel, the city ESPN. In a dramatic shift, the Ivy League's football teams are now going to be able to compete for the FCS Football National Championships in the Wellington Bowl.
Yes, exactly.
That's what it's going to be called.
Exactly.
I'll ask Gene if she wants to sponsor
Thank you so
it.
much.
Yeah.
Really
Appreciate
appreciate it this morning. Just lots to talk about there. Brish Karana with us from Wellington. What a great day. Great talk on the equity market and the dynamics of fixed income around the Fed meeting. We'll do that at 1:30 this afternoon. Please stay with us for Fed coverage. Paul he lost his phone. Paul's like having a total mental Bart Simpson cow over his phone. I said, Paul, calm down. We'll play Bruce.
That man sitting on a little stool takes some money from my hand while his eyes take a walk all over you. Hands me 2 tickets, smiles and whispers good luck. Well,